Shall we start now, everyone? Ready? So we are going to solve a few questions also today. Okay. And before that, a very happy Guru Purnima from my side to all of you all. Okay. So hope you all are doing good. Good. Wonderful. Nice. So in our last session, we discussed about different types of house properties and how to determine the annual values of such house properties. Okay. And today we are going to continue that discussion ahead. See, if I have a house property, that house property can either be let out, given to someone, or I can myself self occupy that property. So if myself occupying that property, it can be for my or my family members residential use, or it can be for kept vacant also, or it can be for my business or profession also. So forget about business and profession. It can be for my and my family's residential use, or it can be vacant. So it is SOP. Two SOPs can be exempted, others will be treated as DLOP. And for LOP, the annual value will be calculated and it will be taxable. So once I calculate the annual value of any property, okay, once I calculate the annual value of any property, then from that annual value, I get the deduction for municipal tax. Which tax? Municipal tax. So what I will have to do now, please pay attention here, that the municipal tax, I will claim this as a deduction from the GAV. So as per the proviso to section 23(1), my GAV will be reduced by this amount, and the balance amount, which is treated as my net annual value, will be charged to tax. But from there also I will get two deductions, 24A and 24B, right? So what I will be doing, as per this proviso, I will take the deduction for municipal tax. Now what is the meaning of municipal tax? See, municipal tax means any tax related to property which is paid to the local authority. So local authority means municipality can be there, corporation, gram panchayat, they are local authorities. So any taxes which they are charging, on my property, it can be by any name. It can be by the name of property tax, it can be by the name of corporation tax, it can be on the name of water tax. The name of the tax can be anything, but the tax is charged by whom? The local authority. Then that tax will be known as what? Municipal tax. And that municipal tax I am allowed to claim as a deduction. I am allowed to reduce out of the GAV, but only if it is paid. That means the deduction for municipal tax is allowed on payment basis. What basis? Payment basis. Whatever municipal taxes I have paid in this year will be allowed as a deduction in this year's annual value. Now it does not matter that the municipal taxes are relating to this year or some other years. For any other year, the municipal taxes are paid in this year, so it will be allowed in this year. Because that time they were not paid, so they were not allowed. So right now they are paid, so right now they should be allowed. Getting my point? This time, whatever municipal tax for this year is there, that also I have paid. So even that will be allowed as a deduction. Please don't see for which year the municipal tax are related to. You are not supposed to focus on that. You just have to follow that are the municipal taxes paid in this year? If the answer is yes, so to whatever year it relates, it will be allowed as a deduction in this year only. Sure? Now, what if this year's municipal tax remains unpaid? They are outstanding, they are payable. Will you take any deduction for those municipal tax in this year? The answer is no. Whenever you will pay in that year, they will be allowed, but not in this year, even though the municipal tax relates to this year. But since they were outstanding, they were due, they were payable, hence they are not allowed as a deduction. Understanding? Sure? Now pay attention. Payment basis, they are allowed. So now they are saying any municipal tax, if it is allowed on payment basis, meaning that they must be actually paid during the previous year, but it has to be actually paid by whom? By the owner. Who has to pay? Owner has to pay. Only then it will be allowed to owner. Now, paid by the owner does not mean he is paying and later on recovering from the tenant. No, then it will not be allowed. Paid by the owner means the burden of that municipal tax coming on your pocket. Meaning that if you are paying the municipal tax and later on recovering those taxes from your tenant, then there is no burden on your pocket. The burden you have shifted to your tenant, you have recovered the taxes from your tenant. Getting my point? Then in that case, it will not be allowed. What if your tenant has paid and he has later on reimbursed you? Sorry, you have later on reimbursed him. Tenant has paid, but have you given him back the money? Yes. So ultimately you are bearing only, no? So you are going to get the deduction. What if tenant paid and he is only bearing? You will not get deduction. What if you are paying and later on recovering from the tenant? You are not going to get any deduction. You are paying from your own pocket, means the burden should be on your own pocket. Getting my point? You are not recovering it from the tenant. Or if the tenant is paying, you are reimbursing the tenant, then also the burden is on your pocket, then you are going to get the deduction. Paid by the owner means the burden of the municipal tax should fall on the pocket of the owner. Only then it will be allowed as a deduction. I hope this you understood. Okay. So these 2 or 3 things are very important. Please remember. Now, sometimes the municipal taxes are given as a percentage. Who charges the municipal tax? Municipality. So municipality or the local authority will charge this percentage on what? Municipal value. So that time the municipal value amount will also be given in the question. Apply this rate on the municipal value. You will automatically get what? Municipal tax amount. Hello? Sure? Should I move ahead? Next one. Now sometimes municipal tax penalty is also charged. Meaning that there was some due date to pay the municipal tax. You did not pay your municipal taxes on time, on or before that due date. You delayed in payment of municipal taxes. For example, the amount of municipal tax was 20,000. You were supposed to pay the municipal taxes by a particular date. You missed that due date. So now later on when you will go to pay that municipal tax, no, so local authority, municipality will charge some penalty also. So along with 20,000, they had charged 2,000 rupees as penalty. So how much total you are paying now? 22,000. But out of that 20,000, only 20,000 is what? Municipal tax. For that you will get the deduction. Not the entire 22. So that 2,000 rupees municipal tax penalty which you are paying shall not be allowed as a deduction. Please remember this. Next one. Sometimes it might also happen that, see, the taxes related to your property are charged by state government also. And these taxes are known as land revenue, state property tax. Yes or no? So are these taxes related to your property? Yes. But are they charged by local authority or they are charged by state government? So any tax charged on your property by the state government in the form of state property tax or land revenue, etc., they are not municipal taxes. Why? Because they are not charged by local authority. So for those taxes also, you will not get any deduction. Only the taxes which are charged by the local authority will be treated as municipal tax, and only for that you are going to get the deduction. I hope the things are clear over here. Okay. So see, whatever we have, studied so far, we'll check in our notes. Okay. Please pay attention. See, this is proviso to section 23(1). Proviso to section 23(1). What does this proviso say? Any tax relating to the house property levied by the local authority is known as municipal tax. What are the examples? Corporation tax, local tax, house tax, property tax, water tax, sewerage. It can be by any name. But since they are charged by the local authority on your property, yes or no? Hence they are known as what? Municipal tax. So municipal taxes shall be deducted from GAV only if they are actually paid during the previous year and they are paid, that is borne by the owner. If these two conditions are fulfilled, only then you are going to claim the deduction for municipal tax. Understanding? Meaning that the deduction is only on payment basis and the deduction will be allowed only if they are paid by the owner. Paid means borne by the owner. Now few examples. For the previous year 24-25, your GAV was 3,50,000. For example, you calculated your GAV and your amount of GAV was 3,50,000. In that year, your municipal value was 3 lakhs. Sir, how come municipal value is 3 lakh and GAV is 3,50,000? Friends, if you remember the format, we take municipal value or fair rent, whichever is higher. That higher amount is compared with standard rent, whichever is lower is expected rent, then expected rent is compared with actual rent, then you get what? GAV. So GAV is 3,50,000 after all these exercise. But while calculating that GAV, what was the municipal value? It was only 3 lakhs. Now they are saying that municipal value was 3 lakh and the municipal taxes levied by the municipal authorities was 10%. So this will be 10% of municipal value only, no? So apply this 10% on municipal value, you will get municipal tax. Now out of this municipal tax, if 80% are paid, will it be allowed? No. Out of this 80% paid, 50% is borne by owner and 50% is borne by tenant. That means for this year, how much is the total municipal tax? 30. Are you going to get the deduction for entire 30? No. Because out of that 30, 20%, meaning 60,000 is still outstanding. You are not going to get any deduction for that. But what about that 24? Is it paid in this year? Yes, it is paid in this year. But the entire amount is not paid by owner. Entire amount is not borne by the owner. Only half of that is borne by owner because half is getting paid by, borne by tenant. Even if it is paid, but it is paid by tenant, borne by tenant, it will not be allowed as a deduction. Only that municipal tax which is paid during the previous year by the owner will be allowed as a deduction. So out of 30, how much is allowed in this year? Only 12,000. So out of your GAV of 3,50,000, you will take the deduction of 12,000. Ultimately, your NAV will be 3,38,000. And by mistake, if you take the deduction for this 24, this NAV will be different and your answer will be wrong. By mistake, if you take the deduction for this 30, this NAV will be different and your answer will be wrong. Getting my point, everyone? Sure? Now pay attention. Another example. GAV for different years are given. For our previous year, it is 3 lakhs. For last previous year, it was 2,80,000. Last to last previous year, it was 2,50,000. Every year, GAV was calculated. And every year, municipal taxes levied was 4,000, 5,000 and 7,000. But if you see that in the last 2 years, whatever municipal taxes were levied, were not paid at all. This year, municipal tax levied is 7,000. Along with this 7,000, the municipal taxes which were levied in the last 2 years, 4,000 and 5,000. So 4 plus 5 plus 7 gives you 16,000 entirely paid in this year. So this will be entirely allowed in this year out of this year's GAV. So what will be this year's taxable annual value, net annual value? 3 lakhs minus 16,000. Meaning this year 7,000 which was paid in this year will be allowed in this year. And earlier years municipal tax which was paid in this year will also be allowed in this year because they were not allowed in earlier years. Because earlier years your GAV was 2,80,000, 2,80,000. 2,50,000, 2,50,000 without taking any deduction for municipal taxes because those municipal taxes for those years were not paid in that year. So now you are paying, take the deduction now. Getting my point, everyone? Sure. Suppose in the above example, municipal taxes of 10,000 for previous year 25-26, meaning that the previous year which is yet to start, even they are paid in advance in this year. So will you get any deduction? The answer is yes. You are not supposed to see that for which year the municipal taxes are paid. You are supposed to see in which year they are paid. Getting my point? So if the municipal taxes of earlier year paid in this year, will be allowed in this year. We did it. What if the municipal taxes of next year you are paying in advance in this year, will be allowed in this year itself? So how much total municipal taxes you paid in this year? For 22-23, 4,000 was there. 23-24, 5,000 was there. 24-25, 7,000 was there. And advance 10,000 municipal tax for the next year also you paid in this year. So total 26,000 you paid in this year. So what was the GAV? 3 lakh. Out of that you will get 26,000 as what? Deduction. So 3 lakh minus 26,000 will give you 2 lakh 74,000 as GAV for this year. Everyone understood? Now pay attention. If in the previous year 24-25 GAV was 3 lakh, property tax levied by local authority was 6,000. That means this is your municipal tax. Some water tax is also levied by state government. So is it a tax levied by local authority or it is a tax levied by the state government? Any taxes related to your property levied by the state government is not municipal tax, will not be allowed as a deduction. But the property tax levied by the local authority, they are municipal tax, they will be allowed as a deduction. Sewerage tax levied by the local authority is also a municipal tax. This will also be allowed as a deduction. Getting my point? Provided this and this paid in this year. Levied in this year, paid in this year. They are municipal tax paid in this year. Yes or no? But this tax, water tax, which you have paid to the state government amounting to 3,000, this is not a municipal tax, hence it will not be allowed as a deduction. So tell me, 6,000 plus 2,000 will give you how much? 8,000. So 8,000 will be allowed as a deduction. But that 8,000 will be allowed only if it is entirely paid. What they are saying, that out of this 8,000, only 80% is paid in this year. Meaning that 80% of 8,000 will give you 6,400. So this year's GAV, you will not get entire 8,000. Rather, you will get 80% of 8,000. 6,400 you will take as a deduction and 2,93,600 will be this year's NAV. Everyone understood? Yes, very good. Now, in the above example, if this water tax was levied by local authority, then instead of state government, if it was levied by local authority, then are you going to get the deduction for this also? So this is also local authority, and example, this is also local authority and this is also local authority. How much is the total now? 6 plus 3 plus 2 will give you 11,000. Now out of that 11,000, if 80% is paid, so 80% of 11,000 will give you how much? 8,800. That will now be allowed as a deduction out of 3 lakhs. So 3 lakh minus 8,800 will now give you 2,91,200. If that water tax was also charged by whom? Local authority. Understanding? Now any municipal taxes which are outstanding in this year or payable will never be allowed as a deduction. I have already told you. Any municipal taxes paid by the tenant will also not be allowed as a deduction. Please remember. And municipal tax is given as a percentage. Apply that percentage on the amount of municipal value. You will get the amount of municipal tax. And that should be paid in this year by the owner. Only then it will be allowed. Yes or no? Next, any taxes related to property but levied by the state government is not equal to municipal tax and the deduction for such taxes will not be available. Any municipal tax penalty will also not be allowed as a deduction. Now remember, the deduction for municipal tax will be available only from let out property and deemed let out property. Because the annual value GAV of that property you are charging to tax. But any municipal tax with regard to your SOP for which you are claiming exemption, 2 SOPs you are claiming exemption, no, annual value nil. So even for those SOPs you can pay the municipal tax in this year. But those municipal taxes will not be allowed as a deduction. Why? Simple. We forgot your GAV, no? Are we charging any tax on your GAV? No. So you forget the municipal tax. Understanding? So your entire annual value we are exempting, no? So why are you claiming the municipal taxes? We forgot your GAV, you forget your municipal taxes. Will you remember? So whenever for any SOP for which you are claiming exemption, if the municipal taxes are paid, they will not be allowed as a deduction. Municipal taxes in respect of SOP whose annual value is claimed as exempt under 23(2) will not be allowed as a deduction. Even if they are actually paid during the previous year by the owner, still they are supposed to be ignored. So that means for which properties the municipal taxes are allowed? Only for LOP and DLOP. That's it. Got it? Now, sometimes municipal tax in respect of a property which is situated outside India, even those municipal taxes are also allowed. So this note number 7, no, I will put this in star. Why? Because I am yet to discuss the properties which are situated outside India. So when I will be discussing the tax treatment for such properties, no, when we are going to solve the questions on these type of properties, no, that time what we will do, that time I will come to this note number 7 and explain it in details, because this point number 7 is a High Court judgment which we are going to discuss. Because as per the Madras High Court, what is happening? Madras High Court judgment is that even the municipal taxes relating to a property which is situated outside India is eligible for a deduction. If the income of that property is getting charged in India, then why not the municipal taxes of those property should be claimed as exemption? They should be claimed as a deduction. Even they should be claimed as a deduction. That is the judgment of the High Court. That we are going to discuss. Don't worry. But as of now, did you understand this entire part? Everyone tell me yes or no. Okay. So now you are in a position to calculate the GAV and NAV. How to calculate GAV? Come on, tell me. If I have some let out property, how to calculate the GAV? Municipal value, fair rent, whichever is higher compared with standard rent. Whichever is lower will become expected rent. Now I will compare it with actual rent. If there was no vacancy, whichever is higher will become my GAV. And minus unrealized rent if any. Hello? And what if there was vacancy? Then I will see that even after vacancy is there, still my actual rent is greater than or equal to your expected rent. Just imagine if vacancy was not there, it would have been more. Yes or no? Then in that case also actual rent will become GAV. But if there is a vacancy and actual rent is lower as compared to the expected rent, then I will add the vacancy period rent. And now if this total is what? Greater than or equal to expected rent, then also actual rent will be taken as GAV. But if the total of actual rent and vacancy rent is still lower than expected rent, in that case actual rent will be ignored, expected rent will be taken as GAV. And from that GAV, finally you are supposed to take what? Unrealized rent as reduction. You will get final GAV. And out of that GAV, you are supposed to take what? Municipal tax deduction, which we have just now discussed. You will get the amount of net annual value. This you are going to do with let out properties. What about SOPs? All the SOPs? No. Out of all the SOPs, any two SOPs, don't do these calculations. Take the annual value as nil. Because two SOPs annual value is 0. About the balance SOPs for which you could not claim the exemption, they will be treated as DLOP. So their annual value will be taxable. How to calculate that annual value? Simple. Municipal value, fair rent, whichever is higher compared with standard rent, whichever is lower will become expected rent. And since these are deemed let out properties, there will be no actual rent. Whatever expected rent is there will be directly becoming your GAV, and there will be no unrealized rent also from here. Because unrealized rent happens only from actual rent, and actual rent is not here. Hello, sir. So entire expected rent of deemed let out property will become what? GAV. And out of that you are going to get what? Municipal tax deduction. In the way in which we have just now discussed. Hello, sir. So will you be able to calculate GAV if I give you few examples? So let's come to one question. Take out your ICI study mat. Then we are going to discuss the deductions and all. Okay, no? So first let us try to calculate GAV. Come to your ICI study mat, and in ICI study mat you can see illustration number 1. Come on. In this illustration, what you are supposed to do, friends? Here you are supposed to calculate the GAV. I will read this example first. Please pay attention. See, Jaishri owns 5 houses in India. Jaishri is having 5 houses in India which are let out. All the properties are let out properties. Yes or no? Compute the GAV of each house from the information given below. So for each house, municipal value is given, fair rent is given, standard rent is given, and even the actual rent received or receivable is given. So you are so lucky that they are not saying that this is actual rent for 10 months and there is 2 months of vacancy, or this is actual rent for 9 months and there is 3 months of vacancy. Even that particular information can be here. But right now we are supposed to assume that the property was owned for the full year. So these figures are given for full year. Expected rent will come for full year. And since there is no discussion about the vacancy, what we will do? Assuming that this actual rent is for the entire year, because entire year the property is let out. Hello. So actual rent is given for the full year. Expected rent is also for the full year. Whichever is higher will become your GAV. Yes or no? So I want all of you to please pay attention. Okay. And first one, municipal value or fair rent, whichever is higher, 90,000. Then compared with standard rent. Ayyo sir, standard rent not given sir. What to do? If not given, then higher amount will be expected rent. Hello. So what will be your expected rent here? 90,000. Okay. And can I say this is your actual rent? Now, is there any vacancy? No. So what? Expected rent or actual rent, whichever is higher. 90,000. First answer, I hope you all got. Second one, 55 or 60, whichever is higher. 60. 60 or 75, whichever is lower. 60. 60 will become your expected rent, and this is your actual rent. So 60 or 72, whichever is higher. 72 sir. Sir, 65 or 65, whichever is higher. 65 only. Hayo, any 65 you take, that is higher only, no? Next one, 65 or 58, whichever is lower. So this will be your expected rent and this is actual rent. So here it will be 60. 25, 24, 25, 25 not applicable, meaning this is your expected rent, this is actual rent, this will be GAV. Sure. And last one, 80 or 75, 80. 80 or 78, 78. Expected rent 78, actual rent 72. 78,000 will be your GAV. Sure. Any problem here? Perfect. Now should I complicate this thing a little bit? What if vacancy was also given in all the cases? So this actual rent would not be for 12 months. It would be for example, 2 months vacancy was given. So this actual rent was for 10 months. Hello. So 10 months actual rent, you will directly compare with expected rent, whichever is higher. No. Now vacancy period rent also you are supposed to calculate. And you are supposed to add AR plus VR. If that is, see, wait, if vacancy is there and still actual rent is higher or equal, then we'll take actual rent. And if vacancy is there and actual rent is still lower than expected rent, then we'll add vacancy rent also. So those type of things also we are going to see in the questions. Okay, no? So here they could have given you vacancy also. So how to do it? Those things we are going to do in the main questions. Right now, did you understand how to calculate GAV? Should I move ahead? Okay. Now pay attention. I will discuss about the next part now. See. Now they are saying that once you calculated your NAV, from that NAV, now you are going to get two deductions. How many? Two deductions. Under section 24 clause A, you are going to get standard deduction, which is 30% of your NAV. And under section 24 clause B, you are going to get deduction for interest on housing loan. Okay. These two deductions you take, final amount will be your taxable income from that property. or loss of that property. If the deductions amount is more as compared to NAV, final amount will be loss. Yes or no? So now you tell me, if let out property is there, self-occupied property is there, deemed let out property is there, okay, no? NAV, GAV minus municipal tax, etc. NAV, okay, no? NAV can be positive for LOP and DLOP. NAV amount can be positive. From GAV, municipal taxes deducted, NAV can be positive. They can be nil also. Yes or no? And it can be negative also. Because what if GAV amount is limited and the municipal tax amount deduction is more? Possible? Last 5 years, municipal taxes you have not paid, amounting to rupees 1 lakh. And this time GAV was only 80,000. So from that 80,000, entire 80,000, entire 80,000, the municipal taxes of 1 lakh will be allowed because that is entirely paid in this year. So your NAV can be negative in that case. Hello, sir. So can your NAV be positive? Yes, it is positive only in the case of LOP or DLOP. It can be nil also. And it can be negative also in the case of LOP or DLOP. But in the case of SOP, NAV positive, nil, negative, positive, no chance only, sir. Why? Because the annual value is exempt. We are supposed to take it as nil only. Yes or no? GAV will be nil. And once the GAV will be nil, no municipal tax deduction, so it cannot be negative also. So finally the SOP, the net annual value will always be nil only. And if you are ever getting positive or negative NAV in SOP, no, please give me your SRO number. I will write a letter to the ICAI. Cancel this registration with immediate effect. Why? Getting negative or positive NAV for self-occupied property, which is not possible only. For SOPs, the NAV will always be nil. But for LOP or DLOP, it can be any amount. It can be positive also, it can be nil also, it can be negative also. Getting my point, everyone? Sure? Now, once your NAV is positive, then only you will get standard deduction under section 24A, 24 clause A. Because the standard deduction under section 24 clause A is not available if your NAV is negative or nil. So 24 clause A, standard deduction is available only if NAV is positive. If the NAV is negative or nil, 24 clause A, standard deduction is not available to you. So in order to claim 24 clause A standard deduction, please check that your NAV has to be positive. Positive NAV, take 30% of that standard deduction. Done. Getting my point? So whatever NAV is coming, no, for example, NAV is positive 1 lakh. 30% of that, 30,000 flat deduction. And why that standard deduction is given? For example, for your property, you might be incurring certain expenses like repair expenses are there. You might have taken the insurance, so insurance premium also you would have paid. Some rent collection charges also you are paying. The property is situated on rented land, so you are paying you are paying the ground rent also. There can be many expenses which might be incurred on the property. Ignore all the expenses. Ignore all the expenses. To cover such expenses, we are giving you the standard deduction. Whether you are incurring expense or not is immaterial. If you are not incurring expenses, still we are going to give you 30%. If you are going to incur expenses, we will ignore your expenses, still we are going to give you 30%. Getting my point? So what if my expenses are more than this 30% amount? Still you are going to get only 30%. Expenses will be ignored because your expenses were not there or expenses were less than 30%. Still you were going to get 30% only, no? Hello sir. So please take 30% standard deduction only if your NAV is positive, and that 30% standard deduction is a fixed amount, is a notional amount, is an imaginary amount which is allowed to you as a deduction, so that if at all you might have incurred some expenses, all those expenses are covered by this deduction. Hence your expenses will not be allowed separately as a deduction, because to take care of that deduction, this standard deduction is given. Getting my point? Because see, it becomes very difficult for us also to identify that what type of expenses you have incurred. Sometimes even the expenses are not incurred and you are coming to claim that expenses. You will come with the bogus bills and all, and it will be, very time taking process for us also to verify whether the expenses which you are going to claim are actually incurred by you or not. So even we will have to put our time in order to verify those expenses, that whether the claim is, truthful claim or you are trying to lie to us. Getting my point? So in that particular scenario, no, we are not going to get ourselves involved in these kind of stuff. And we also tell you, forget about your expenses. Don't come and claim those expenses here. It will be covered by this 30%. Even if you have not incurred any expenses, no, don't worry. You take this 30% from us. Deduction. So is the government going to pay you money? No, under the head house property, no, whatever income you will calculate, out of that income, 30% will be reduced. 30% will be allowed as a deduction. Balance income after taking 30% will only be charged. So if you see any expenses in the question which are related to your property, like repairs expenses are there, insurance premium is there, ground rent is there, rent collection charges is there, blah, 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 whatever expenses you can see, ignore all such expenses. But please don't ignore municipal tax. They are allowed separately from your GAV. Please don't ignore interest on housing loan, because you are going to get a separate deduction for interest on housing loan. Other than these two, all other expenses ignore. Getting my point, everyone? Sure? Sure? Pay attention. Read this. Standard deduction 30% of NAV. If the NAV is positive, then only you are going to get 24A. If the NAV is negative or nil, you are not going to get any standard deduction. Allowed to all the assessees to cover up the expenses, if any, incurred on the property. This is a flat or fixed amount of deduction available on notional. Notional means imaginary basis, irrespective of the actual expense incurred for the property. Hence, no other expenditure shall be allowed as a deduction while computing the income under the head house property, meaning expenses like repairs, insurance premium, rent, collection charges, ground rent, annual charges, society maintenance charges, etc., etc., etc. will not be allowed as a deduction, because you are going to get this standard deduction. Got it? Standard deduction done. Now comes the most important part, interest on housing loan. Okay? So one mistake the students commit while calculating GAV. So that mistake we are not going to commit, because I have taught you. Now I am going to teach you this interest also, so you are not going to commit any mistake in interest calculation also. Everyone. And the moment we'll start solving the questions, no, you'll come to know that this chapter actually is easy. No, it is not easy. It is made easy. Understanding? Okay. Now let's come to the interest deduction. Okay. Now see, under section 24, there is clause B that says that you are going to get the deduction for interest on housing loan. So you are supposed to take a housing loan. What is housing loan? Housing loan is nothing but a capital which you borrow for the purpose of house property. For example, for what purpose? Purchase of house property, construction of house property, repair of house property, renewal of house property, renovation of the house property, reconstruction of the house property, etc. So whatever money you are going to take as a loan, that loan money you are going to use for any purpose of the house property, yes or no? Either to purchase or to construct or to repair or to renew, etc. So that money which you have borrowed, the capital which you have borrowed for any of the purposes of the house property, then that capital borrowed, that loan will be treated as what? Housing loan. So are you going to get the deduction for housing loan? Yes or no? No, you are going to get the deduction for interest on housing loan, not the housing loan. You are going to get the deduction for interest which you are going to pay for this housing loan. So that interest is going to be allowed under section 24 clause B, and that will be allowed on due basis. Sir, you are very confusing fellow, sir. Sir, sometimes you say that some expense is allowed on payment basis, and now you are saying that this is allowed on what basis? Due basis, sir. Sir, why this collaborative? I will tell you why this collaborative. Wait. See, if you talk about municipal tax, the deduction for municipal tax is on what basis? Payment basis, right? Now they are saying that whatever interest on housing loan will be there, that will be allowed on what basis? Due basis. Which basis? Due basis. So why this collaborative, sir? One is allowed on payment basis, another is allowed on due basis. Either both should be allowed on payment basis or both should be allowed on due basis. No, sir. See, I will give you a logic now. If you understand, then it is a logic. Otherwise, it is a magic. Okay? So, we are supposed to consider the fact that if the house property is there, we are going to charge some income under this head. And what is that income? Annual value we are going to charge. So, while calculating the annual value, we consider rent of the property, income of the property, actual rent. So, can I say actual rent is the income which is getting charged under this head? Hello? And if you remember, actual rent is the rent for the period for which the property is actually let out, whether received or receivable, meaning that the income of this property which is getting charged under this head is getting charged on what basis? Due basis. Whatever rent, actual rent for the let out period is there, whether you have received or it is still receivable, for that entire period, whatever rent becomes due is taken as income to calculate your annual value. So if the income under this head, under the head income from house property, that income is what? Actual rent which is considered to calculate the annual value. If this income is only taken on what basis? Due basis, meaning received also as well as receivable. So the expense should also be allowed on what basis? Due basis. But sir, this understood, this logic understood. Then please take the municipal tax also on due basis. Why you took out payment basis? You already know the answer. Just imagine if the municipal tax is allowed on what basis? Due basis. Municipality will keep on asking for municipal tax, and are you going to ever pay that tax to municipality? No. So in order to make you all pay that tax to the municipality on time, it should be allowed here on what basis? Payment basis. Only then you will be religiously and seriously make the actual payment. Otherwise, they will keep on running behind you. And you are never going to pay that tax to municipality. Municipality will say, we will charge penalty, see, charge, no problem. We are going to anyways get the deduction for that municipal tax on what basis? Due basis. Understanding? And that is a statutory due. Whenever there are some statutory dues, They are always allowed on what basis? Payment basis only. Please remember. That is the reason why it is not allowed on what basis? Due basis. It is allowed on payment basis. And since the income under this head is charged on what basis? Due basis. That is the reason why the allowable expense is on due basis. But municipal taxes are dangerous. It will be dangerous if it is allowed on due basis. Hence, the deduction for municipal tax is only on payment basis. Got it? Everyone? Now, what this means? That whatever interest on housing loan which becomes due for your previous year 24, 25, whether it is actually paid or it is still payable, no matter what, it will be allowed as a deduction under section 24 clause B in previous year 24-25 itself. So this year's interest paid in this year will be allowed in this year. Why? Because it is this year's interest. This year's interest still payable. Still it will be allowed as a deduction because this is this year's interest. Now you are supposed to see that to what year the interest relates. If the interest relates to my year, it will be allowed as a deduction in my year only. That's it. Whether I have actually paid or it is still payable. This year's interest was 30,000. I paid only 25,000. How much deduction I will get? Entire 30. 25 which is paid is for this year. 5,000 which is still payable is for this year. This year interest is 30 will be allowed fully. This 5,000 which was payable in this year, no? Now in the next year you are paying it. Can you claim that 5,000 as a deduction next year on payment basis? No, because it was already claimed in this year on what basis? Due basis. Now pay attention. Last year interest was 28,000. Out of that 8,000 was payable which you did not pay last year. That 8,000 you are paying in this year. Will you get any deduction for the 8,000 in this year? The answer is no. Why? Because the 8,000 which was for last year was already allowed last year on what basis? Due basis. In this year on payment basis it will not be again allowed as a deduction. Got it? Everyone? So pay attention. So interest on housing loan. What is housing loan? Did you understand? On that housing loan, interest will be allowed as a deduction on what basis? Due basis. Sure? So in other words, any interest due in the relevant previous year for your housing loan, if it is paid during the previous year and it is still outstanding during the previous year, but this is the current year's interest, this is also current year's interest, will be allowed in the current year itself. But wait, this interest will be fully allowed. Whatever interest becomes due in this year will be fully allowed without any monetary limit if that interest relates to LOP or DLOP. So this year, what was the status of the property? LOP or DLOP? And this year's interest for this LOP for DLOP, whatever interest becomes due in this year, full amount will be allowed as a deduction without any monetary limit. Now, what if the status of the property in this year is SOP? And to this SOP, the interest relates. So, whatever interest on the housing loan which you have taken for this SOP, no, that entire interest for this year will be allowed in this year, but subject to a maximum limit of 30,000 or 2 lakhs, as the case may be. Hello, sir. So, I have to check that what was the status of my property in this year. See, my property can be SOP in this year. It can become LOP in the next year also. Huh? Or my property is LOP in this year. Next year it can become SOP. Depends that how I am using that property in this year. If I am using that property in this year as what? Self-occupied property. Then the property is SOP. And next year I have given the same property on rent. So next year the status of the property will become LOP. So next year's interest of the same property will be allowed fully because next year the status is LOP. Hello. But this year's interest will be allowed on the basis of this year's status. And what is this year's status? SOP. Getting my point? and whatever interest which relates to SOP, whatever interest for this year relates to SOP will be allowed in this year fully, if that interest is 30,000 or 2 lakh, as the case may be, or lower than that. But if that interest is more than the available limit, yes or no, then interest to the extent of this limit will be allowed, excess interest will be ignored, will be disallowed. For SOP, GAV will be nil. Municipal tax will not be allowed as a deduction. So NAV will become nil. Out of that standard deduction you are not going to get, but they are good people that they are giving you interest on housing loan deduction. But it should not be given unlimited. If it is given unlimited, then your loss will be from this property, there will be a loss calculated and that loss will be unlimited. They want to restrict the amount of loss. And that is possible only if they put a restriction on what? Interest deduction. So hence they are saying that for your SOP, the interest deduction will be only limited to the extent of 30,000 or 2 lakhs in some cases. So would you like to take more deduction of 2 lakh or you are happy with 30,000? Sometimes the interest related to your SOP is allowed subject to maximum 30. Or sometimes they are saying, no, don't take 30 limit, take the deduction of interest up to a limit of 2 lakhs. So if interest is allowed to the extent of 30, your loss will restrict to the extent of 30. And what if the interest is allowed to the extent of 2 lakhs? So your loss will also increase to the extent of 2 lakhs and that extra loss will be allowed as a set off from your income, thereby reducing your income more. You will pay less tax. So which limit you would like to take? You would like to take 30,000 limit or you would like to take more, 2 lakh rupees limit? That is not available in your hands. Now please pay attention. Always SOP will be given interest deduction to the extent of 30. But if you want to take 2 lakh rupees of limit, 3 conditions must be satisfied. How many conditions? 3. First, the loan to which the interest relates. Yes or no? The loan must be taken on or after 1st April 99. Loan cannot be taken. If the loan was taken prior to 1st April 99, no, then 2 lakh limit cannot come. Then the limit will be 30 only. So the loan must be taken on or after 1st April 99. This loan was taken for purchase or construction of your property. What if the loan was taken for repairs? On that loan, interest will be allowed? Yes, it will be allowed because it is still your housing loan only, no? Repairs of the property, macha. Repairs of the property, you are taking a loan for that. That is a housing loan only. But on that 2 lakh limit cannot be applied. On that 30,000 limit can be applied. If you want to take 2 lakh limit, the loan should be for purchase or construction. Hello? Because purchase or construction loan will be higher amount. So on that the interest will be higher. So for that 30,000 limit might not be sufficient. Take 2 lakh rupees of limit. But repairs loan are smaller, no? Renovation, repairs, loans are smaller amounts. On those smaller amounts, interest will also be smaller. So 30,000 limit will be sufficient. Getting my point? Loan must be taken on or after 1st April 99 for the purpose of purchase or construction of the property. And wait, by taking the loan, you are purchasing or constructing the property. No, that purchase or construction activity should also get completed within 5 years. From the date of taking the loan? No, from the end of the financial year in which the loan was taken. So for example, you took one loan in 2014. 1st August 2014. 2014-15 you took the loan. Are you taking the loan on or after 1st April 99? Yes, you took the loan in 2014-15. This loan was taken either for purchase or construction. For example, you took the loan for construction. Now this construction for which you have taken this loan, this construction activity must be completed within 5 years. Within 5 years from the date of taking the loan? No, from the end of the year in which the loan was taken. What was the year in which you took the loan? 14-15, no? So from the end of 14-15, that means 31st March 2015. From that date, within 5 years, the construction should be completed. Meaning, 31st March 2016, 31st March 17, 18, 19 and 20. On or before 31st March 20, the construction should be completed by taking this loan in 14-15. Getting my point? If all the three conditions which I have told right now, if all these three conditions are fulfilled, so on this type of loan, whenever you will give the interest, that interest will be allowed to the extent of maximum 2 lakhs. And if housing loan is any other housing loan and not this housing loan, then on that housing loan, the limit will not be 2 lakh, it will be 30,000. But this 2 lakh and 30,000 you will be doing only if the loan is for SOP. You are not supposed to see all this if the loan is for LOP or DLOP. For LOP or DLOP, whenever you have taken loan, whatever housing loan you have taken on that, whatever interest you are going to give now for this year will be allowed fully in this year without any monetary limit. So this 2 lakh or 30,000 monetary limit for all the housing loans, the limit is 30. But on this special type of housing loan, the limit is 2 lakh. But this limit case is applicable only if the property is SOP. Getting my point? So tell me, this year, your house property, the status of your house property this year is LOP or DLOP. And for this house property, you have taken some loan. On that loan, whatever interest which becomes due in this year now will be allowed fully in this year only, without any monetary limit. Understood? For example, this year, 24-25, the property was SOP. And for this property, you have taken a loan. So on that loan, whatever interest which becomes due in this year now will be allowed subject to maximum 30,000. And if the loan which you took for this property was covered here, then whatever interest which becomes due in this year now will be allowed subject to maximum 2 lakhs. Got it, everyone? Now pay attention. You have two SOPs. SOP 1 and SOP 2. For both these SOPs, you can claim annual value as exempt. Hello? Now, for example, interest on housing loan for SOP 1 was 40,000. And for SOP 2, it was 25,000. And let us assume that for both these SOPs, whatever housing loan was taken, no, that housing loan was not a special housing loan, it was a normal housing loan. So how much interest you can claim out of this? 2 lakhs? How much interest you can claim to the extent of maximum 2 lakh or to the extent of only 30? Only 30. Because the loan was not a special loan. 3 conditions. 1st April 99 or after that the loan is taken. Loan is taken for purchase or construction. Purchase or construction is completed within 5 years. All these conditions are not fulfilled. That means the housing loan, the interest is on that housing loan which is not a special housing loan. Getting my point? So now what will be the maximum limit on this? Tell me. On this also the limit will be 30 and on this also the limit will be 30. So this will be allowed subject to maximum 30. So can I say entire 40 will be allowed or only 30 will be allowed? Only 30 will be allowed. Getting my point? And for this entire 25 you can claim because that is within the limit of 30. Hello sir. So you will claim 25. Now tell me, for SOP 1 and SOP 2, assessee is one only, no? For his one SOP as well as both the SOPs taken together, total interest cannot be more than 30. So either you are claiming for your one SOP or you are claiming for both the SOPs together, your total interest deduction cannot be more than 30 or 2 lakh as the case may be. Here what we took, 30-30 limit. So subject to 30 this is allowed, subject to 30 this is allowed, but both taken together is more than 30, no? So if you take this, then you forget this. Or if you are taking this, then this will not be allowed, only 5,000 allowed. So that the total is not more than 30,000. Because for one assessee, for his one SOP or both the SOPs taken together, the total interest allowable cannot be more than 30 or cannot be more than 2 lakh. This 2 lakh or 30,000 is the overall limit of interest available to one assessee. Getting my point? Now here it was 30-30. What if I change this example a little bit? Okay. Now what I will do, pay attention. Here it was 1,40,000 and here it was 2,10,000. Possible? Both the loans were special loans. So SOP 1, SOP 2, whatever loan was taken, it was taken on or after 1st April 99 for the purpose of purchase or construction. Purchase or construction completed within 5 years. That means the loan was special. So the limit of interest for each loan will be how much? 2 lakhs. Hello? How much? 2 lakhs. So this will be allowed 1,40,000 and this will be allowed 2 lakhs. Got it? But for one assessee, for his one SOP or both SOPs taken together, the total interest cannot be more than, come on, 2 lakhs. So for example, if this 2 lakh is taken, forget about 1,40,000. If you want to take 1,40,000, take, then this 2 lakh will not be allowed, only 60 will be allowed, so that the total does not exceed 2 lakhs. Hello, sir. Understood? Now pay attention. What if here it was 1,40,000, here it is 70,000. Okay. For SOP 2, you took a repairing loan to repair the house property. So here for this 70, the limit applicable will not be 2 lakh, limit applicable will be 30,000. Sure? So tell me, 1,40,000 or 2 lakh, whichever is lower, 1,40,000. And here 70 or 30, whichever is lower, 30. Understood? Both taken together cannot exceed. Now will you take 2 lakh or you will take 30,000 only? Always take 2 lakh. If one of the loan is having a higher limit of 2 lakhs, so for both the loans, the total amount can be 2 lakhs maximum. Yes or no? So tell me, 140 is allowed and 30 is also allowed. Both taken together, does it exceed 2 lakh? No. So entire 170 will be allowed as a deduction. Got it? Should I move ahead? This is the difficult part of interest on housing loan. Come on, tell me. Is it difficult or easy? Will you understand? Now, deduction for interest is available. What are they saying? Deduction for interest is available, not the housing loan. So what if this housing loan principal amount is repaid in our previous year? So are you going to pay only interest or you are going to return the principal component also? You are going to return the principal component also, no? So whatever loan you have taken, you are returning that loan. And along with that principal repayment, interest will also go. So interest you are going to take the deduction over here. But what about this principal repayment? Will you get any deduction of this principal repayment under section 24 clause B? The answer is no. Under 24 clause B, only the interest component of the loan will be allowed. And whatever principal component of loan is repaid, no, that is not allowable under the head house property under 24B. Getting my point? So while calculating house property head income, you are supposed to ignore this principal repayment because this is not going to be allowed as a deduction under your house property head. Only the interest is allowed. Yes or no? But wait. After your house property is done, salary is done, PGBP done, capital gain done, IFOS done, clubbing done, set off done, you will calculate your GTI, gross total income. From that gross total income, chapter 6A deductions are available. Under chapter 6A deduction, there is one deduction ATC. ATC. See, under section 80C, you can claim the deduction for this principal repayment subject to certain conditions. But that principal repayment is not allowable under the head house property. You can claim the deduction of this from your GTI under section 80C, but that too also subject to certain condition that we are going to learn later on. But this can never be allowed as a deduction under house property. Yes or no? Sure? Come on, pay attention. Now see, we have done this so far. For LOP and DLOP, full amount of interest is available without any monetary limit. That means whatever interest due for this year will be allowed fully in this year without any monetary limit. But if SOP is there, whatever interest becoming due in this year for this SOP will be allowed as a deduction subject to a limit of 2 lakh or 30,000, depends on the type of loan. Yes or no? Next one. Principal amount of housing loan is repaid during the previous year. Deduction under 24B is not available. Rather, it is allowed under 80C subject to fulfillment of certain conditions. This just now I told you. Now, sometimes what happens that to take the housing loan, you might incur certain other expenses also, like commission you have paid brokerage also, you might be paying processing fees, etc. So to take the housing loan, these type of expenses also you can incur. So these are the expenses related to your housing loan only. But are these expenses in the nature of interest? The answer is no. So they cannot be claimed as a deduction under this head, because under this head, whatever interest will be there on housing loan, only that interest is allowable as a deduction. Any expense other than interest on the housing loan, any other expense is incurred, that is not allowable as a deduction. Ignore all such expenses. Getting my point? For example, you want to take a housing loan from the bank. Okay. Now you don't know what are the documents are required, how to negotiate with the bank, how to take the maximum amount of loan at a minimum possible rate of interest. Okay. So you took the help of some expert who is expert in documentation, who has good contacts with the bank. Okay. So you are going and telling him that, boss, I want to take a housing loan. Can you help me out? So that fellow who is expert, who has some contacts in different banks, he will take the documents, proper documentation he will do, and he will go in the bank on behalf of you. He will try to fetch maximum loan for you at a minimum possible rate with all the documentation, etc. Is he helping you take the housing loan? So would he charge any brokerage commission, etc.? Yes. And when your loan application gets accepted in the bank, your loan processing starts, that time the bank also charge processing charges. So all these are expenses which you are incurring in connection with your housing loan only, but they are not in the nature of interest on housing loan. Hence, they are not allowed as a deduction under this head. Under this head, only one, interest on housing loan, will be allowed. So if you see any kind of expenses like this, even though they are related to your housing loan, they will still be ignored, disallowed. Yes or no? Sometimes you pay your interest on time, but sometimes interest payment also delays. So the lender to whom you are supposed to pay the interest on housing loan, that lender will not wait beyond the due date. And if you are letting him wait beyond the due date because you have not paid the interest on due date, he is going to charge interest on the interest component. So that extra interest which he is charging is in the nature of penalty, so that you don't default in payment of interest later on in subsequent installments. Getting my point? So are you going to get the deduction for that penal interest also? The answer is no. That interest paid is on interest. We are not going to give the deduction for interest on interest. We are going to give the deduction for interest on loan. So whatever interest you have paid on loan, which was payable on this loan, only that interest is allowed. Any extra interest which is charged on this interest as a penalty will not be allowed as a deduction, because that is not on the principal component. So what if the interest was only 5,000, but since you delayed in payment of interest, extra 500 interest was charged. So total interest you gave 5,500. How much deduction you will get? Only 5,000. That extra 500 you are giving, no, in the nature of penal interest, will be disallowed, will be ignored. Sure. Next one. Now, there is one assessee having house property H1. For example, this house property is in Bangalore. Now this assessee mortgaged the house property 1 to the bank to get a loan from the bank. So the assessee wanted to take a loan from the bank. So bank told that we are going to give you loan, but as a security, as a mortgage, what can you keep? So this assessee said that I am keeping my house property 1 as mortgage and in return give me a loan. So bank said, okay, mortgage the house property which you are already having, take a loan. Now what the assessee will do with this loan? Assessee has used this loan to buy another house property 2. So Bangalore house property mortgaged, took a loan, and by this loan a house property in Chennai is purchased. Now tell me, how many house properties assessee will have? One house property or two house properties? Come on, give me the answer fast. Two house properties. Sure. Absolutely right. You did not fall in my trap now. See, house property 1 is just kept as a mortgage. I am still the owner of that house property. Yes or no? And by keeping it on mortgage, I took a loan and I got the ownership of another property. So now I have two house properties. Yes or no? But only one loan. So interest on this loan will be allowed as a deduction out of the annual value of house property 1 or house property 2. That is the question. Come on, tell me. Whatever interest you have paid on this loan, whatever interest you will pay to the bank, that interest will be allowed. Now you are confused that whether to take this interest as a deduction from the annual value of house property 1 or annual value of house property 2. Always see that on which house property the loan is used. So the amount of loan is used to buy house property 2. So the interest on that loan will also be available from the annual value of house property 2 and not 1. 1 was just kept as a mortgage to obtain the loan. Is the loan amount used on house property 1? No. Loan amount was used on house property 2 to purchase house property 2. Yes or no? So any interest on this loan will be available from the annual value of that house property on which the loan is used. And that happens to be a house property 2. Got it? So from 1 annual value of this property, from this interest will not be allowed. It will be allowed from annual value of house property 2. Done? Now, another point. You have already taken a loan, housing loan from HDFC Bank. The amount of that loan outstanding as of now is 20 lakhs. You might have taken a certain amount of loan. You have repaid the loan also, interest also in the past. But right now, the total amount of loan, housing loan outstanding as on today is 20 lakhs. Now, this 20 lakh was taken from HDFC Bank at certain rate. This was your housing loan only. Now, what you have done? You have taken a fresh loan from ICICI Bank amounting to same 20 lakh, and with this 20 lakhs, you repaid your old housing loan. Why you have done this? Come on, tell me. Why would you have done this? Because definitely the rate of interest on the new loan would have been cheaper as compared to the old. So that you at least save some interest. Hello? So you were getting a fresh loan at a very concessional rate of interest. You took a 20 lakh rupees of loan, and by taking that 20 lakh rupees of loan, new loan, you repaid your old housing loan. Getting my point? Now how many loans you are having? Same 20 lakh only. One loan. Now the question is, now on this new loan, whatever interest you will pay, hello, on this new loan, will it be allowed as a deduction under 24 clause B? as interest on housing loan? The answer is yes. Only the lender is changing, the loan amount remains same and the type of loan remains same. Any new loan taken to repay the old housing loan is just replacing your housing loan. Instead of this loan and interest now being payable to HDFC, it is now payable to what? ICICI Bank. Only the lender, this is known as shifting of loan from one bank to another. Now your housing loan is shifted from HDFC Bank to ICICI Bank. Getting my point? ICICI Bank is not going to give you money in your hands. ICICI Bank will directly pay the 20 lakhs to HDFC and tell HDFC, now don't ask any money from this fellow, because on his behalf, whatever loan he had taken, no, we are paying you. Now he is my customer. He is going to give interest on this 20 lakh to us. Getting my point? Whatever interest is paid, no, on this fresh loan is as good as your interest on housing loan. And this interest on housing loan will be allowed as a deduction under 24B. On the old loan also interest was there, was claimed under house property. No. So this new loan has just replaced the old loan. So this also becomes a housing loan. On this, whatever interest is there, you can claim easily under section 24 clause B. Got it? Now one question arises. Should I ask you? Loan from HDFC you took prior to 1st April 99. So on that, whatever interest you were paying was allowed subject to maximum 30,000. Now this loan which you have taken, no, is in the current year, on or after 1st April 99. So tell me, whatever interest on this new loan will be there, will be allowed subject to 2 lakh or 30,000 only. Whatever limit which was applicable on the interest for the old loan, no, will only be applicable on the interest on the new loan, because new loan has just replaced the old loan. That's it. Getting my point? So you are not going to start getting 2 lakh rupees interest just because the loan was, this new loan was taken right now. No, this is replacing the old loan only. No, so it is as good as your old loan. But the lenders are new. That's it. The rate of interest is new. Getting my point? Next one. Now, very important concept of pre-construction interest. Okay. So this concept is going to take some time. Please be patient. Okay. And very easy concept. Very easy concept. You will understand. Whatever will happen, no, you will understand. Don't worry about that. Okay. See, pre-construction interest, also known as PCI. It is an interest for pre-construction period. Now, if I ask a layman that what is a pre-construction period, the layman will say the period which starts from commencement of construction and ends on completion of construction. Hello? The date on which I start construction and the date on which I end the construction is completed. This is pre-construction period. No. Think from the point of view of interest. Think from the point of view of interest. Are you going to pay interest with effect from the date of starting the construction or with effect from date of borrowing? Yes. So from the interest perspective, you are going to pay the interest to the bank with effect from the date of borrowing only, no? So you took one loan from the bank, and by taking this loan, you now start the construction, or construction was already started. To continue this construction, you have taken the loan. Construction can start anytime. It can start prior to taking the loan. It can start after taking the loan. Irrelevant. But the date on which you are taking the loan, from that date only, your interest starts accruing, no? Hello? So always take the date of borrowing. On this date, if you have taken the loan, so by taking this loan, you are constructing a house. The house construction is going on. And finally, the construction completed in 24-25. Whatever date, 24-25, construction completed. Now tell me, in 24-25, do I have a house property? Because the construction is completed. Do I have a house property? Yes. But can I say, till 24-25, beginning till the end of 23-24, I did not have a house property. House property came to me when I completed the construction, and that happened in 24-25. So can I say prior to 24-25, whatever previous years were there, for which I was paying the interest, but during that period I did not have a house property, so I could not claim the deduction for that interest. That interest is pre-construction interest, which is till that previous year, which is immediately preceding to the year of completion. Because in the year of completion, you already have a house property. From this year, whatever interest will be there will be allowed from this year itself. But what about that interest which was prior to this year till 31st March? That interest, even if it was interest on housing loan, was not allowed as a deduction for these many years. Why? Because for these many years, the property was under construction. There was no property, hence there was no annual value calculated. And if there was no annual value calculated, interest for these many years was not allowed as a deduction. So interest for these many years will now be allowed as a deduction as pre-construction interest. Understanding? So what you are supposed to see? I am talking about pre-construction interest. Pre-construction interest is the interest for pre-construction period. And from the point of view of pre-construction period, from the point of view of interest, what is pre-construction period? It is the period which starts from date of borrowing and ends on 31st March. Which 31st March? Immediately preceding to date of completion of construction. So the date on which the construction is completed, I am not supposed to end my pre-construction period on that date. No, I am supposed to end my pre-construction period on 31st March, immediately prior to DOCOC, date of completion of construction. So whatever is my date of completion of construction, immediately prior to this date, whatever 31st March was there, no, on that 31st March, my pre-construction period will end. That means till that previous year, whatever interest was there, which was not allowed to me, will now be allowed as a deduction as my pre-construction interest. Because the date of completion of construction is coming in any previous year, whatever interest which becomes due in that previous year will now be allowed as a deduction from that year. But the interest prior to that year, no, till 31st March, was not allowed as a deduction. Now you are going to claim that as a deduction. As what? Pre-construction interest. And now this pre-construction interest will be allowed under section 24 clause B, and it will be allowed in 5 equal annual installments. This entire interest for this much period will not be allowed together. Because see, it could be interest for 3-4 years. It could be interest for 5-6 years, because 5-6 years the construction was going on. 3-4 years the construction was going on. So the interest component will be a bigger amount. This bigger amount we cannot allow together. Take this amount in small parts, 1/5, 1/5, 1/5 for 5 years. 5 installments, annual installments, this will be allowed. And the first installment you will be able to claim in the year in which the construction got completed. From that year onwards, 1/5 you are supposed to claim. Getting my point? Everyone. So please remember, this is not the only interest. This is the interest which will be allowed in addition to the normal interest becoming due in that year. Because whatever loan which will be outstanding in my previous year, on that loan, interest will become due in my previous year. But with that, in addition to that, this pre-construction interest 1/5 amount can be claimed as a deduction. Got it? So what is pre-construction interest? Come on, tell me. This is the interest for pre-construction period. What is pre-construction period? The period which starts from date of borrowing, it ends on 31st March, immediately preceding to date of completion of construction. So this is the period for which whatever interest is given, that interest is known as pre-construction interest. Even that is allowed under 24 clause B, but it will be allowed in 5 equal annual installments. Everyone, are you all understanding? Tell me yes. Now tell me. Now this 5 equal annual installments, whatever interest was there will be allowed in 1/5, 1/5, 1/5. First 1/5 will be allowed in which year? first 1/5 will be allowed in the year starting from the year in which the construction was completed. And the interest which you are claiming, no, as a pre-construction interest, 1/5 amount, this will be in addition to the normal interest becoming due in that year in which you are trying to claim 1/5. So you are trying to claim 1/5 in the year in which the construction completed. But in that year also, some interest will become due, no, because the loan will be still outstanding. So on that loan, whatever normal interest becomes due for that year, that is going to be allowed. But along with that, this 1/5 you take in that year. Got it? So this interest shall be allowed in addition to the normal interest which becomes due in the relevant previous year. Hence, where the question has pre-construction interest in addition to normal interest in any previous year, the deduction under 24B shall be calculated in what manner? You are supposed to claim in the current previous year, you please check that is there any loan outstanding in this year? Yes. So if loan outstanding, so normal interest will become due in this year. And now check, was there any pre-construction interest? Yes. On that, was there any 1/5 remaining to be claimed in this year? Yes. First year claim, second year claim. This is the third year in which I have to claim 1/5. Or this may be the first year in which I am claiming 1/5. Or this may be the fifth year in which I will be claiming. Hello. So you add your 1/5. This year, current year can be the first year for taking 1/5, or it can be the second year for taking 1/5, or it can be the third year for taking 1/5. Because what has happened, the year in which the construction is completed, from that year onwards, 1/5 is allowed. Can I say construction can be completed in my previous year? So in my previous year, interest will become due, and 1/5 of the total pre-construction period interest will be allowed for the first time in my previous year, no? What if the construction was completed in last year? So total pre-construction interest, out of that 1/5 was allowed for the first time in the last year. So this will be the second year, my previous year will be the second year in which 1/5 will be allowed. What if the construction got completed 4 years back? So total interest, total pre-construction interest, which was allowed in first year, second year, third year, fourth year, and this is the fifth year in which 1/5 will be allowed. Along with the normal interest of this year, 1/5 will also be allowed. So total interest, I will have to check. Interest due in this year plus 1/5 pre-construction interest installment coming in my year. So this will be the total interest for my previous year. And in my previous year, if the status of the property happens to be LOP, DLOP, this interest will be fully allowed. And if in my previous year, the status of the property is what? SOP, this interest will be allowed subject to maximum 30,000 or 2 lakh as the case may be. Got it? Easy or difficult? Easy, no? No. Made easy. Okay, now pay attention. See, I have made this small example for you. Okay, with numbers so that you understand the concept properly and clearly. Okay, now for example, in the previous year 2021, you took a loan of rupees 12 lakh at 10% on 1st July 21. Sorry, this is 20. 20. This is 1st July 2020. Wait. Yes, 1st July 2020, you took the loan. Sure, everyone? So on 1st July 2020, you took a loan of rupees 12 lakh. Now by taking this loan, you started the construction. So tell me, in 2021, do you have a house property or construction is going on? So in 2021, you might have paid interest for 9 months, starting from July to 31st March 21. And in the next year also the construction was going on. Next year also the construction was going on because the construction got completed in 24-25. Can you see 30th June 2024 is the construction completion date? So now when you are having the house property actually, can I say in the 24-25 you are having a house property? So whatever interest becomes due in 24-25, interest for this period as well as interest for this period. Can I say interest from 1st April to 30th June? as well as interest from 1st July to 31st March. Whatever interest which will become due for this year will now be allowed as a deduction in this year, because this year's interest will be allowed in this year because I am having a house property in this year. But tell me, what interest could not be claimed? Can I say the interest till 31st March 24 could not be claimed? Because till 31st March 2024, I did not have a house property. So annual value of the house property was not calculated. So whatever interest for this year could not be claimed, even if it was my interest on housing loan. Now this entire interest, no friends, is known as what? Pre-construction interest. So calculate for this 9 months, this 12 months, this 12 months, this 12 months. Tell me, are they telling you that any loan repayment is done? No. Meaning that this 12 lakh, 10% will be calculated for 9 months. On this 12 lakh, 10% will be calculated for 12 months. On this 12 lakh, 10% will be calculated for 12 months. On this 12 lakh, 10% will be calculated for this 12 months. 1, 2, 3, 4, 5. 4 lakh 50,000. This is the total interest which becomes due in my pre-construction period, which I wanted to claim as interest on housing loan but could not claim because in this period there was no house property, there was no annual value from which I could have claimed it. Sure. So now this 4 lakh 50 is what? My pre-construction period interest. This is my total pre-construction interest. Can I claim it as a deduction? Yes. Fully? No. 5 equal annual installments. So I will do 1/5. What will be the 1/5? 90,000. Now tell me, with effect from which year I will be able to claim this 90,000? With effect from the previous year in which the construction got completed. Now tell me, in our example, what was that previous year? 24-25. So in 24-25, 90,000 will be claimed for the first time as pre-construction interest, first installment. But don't you think 12 lakh is still outstanding? And this 12 lakh for this year, 10% interest will become due on this 12 lakhs. Hello. So normal interest for 24-25 will be on 12 lakh, 10% full year. So that is 1 lakh 20. Along with that, in addition to that, 90,000, 1/5 amount will be claimed for the first time in 24-25, first installment. So what is the total interest for my previous year now? Come on, tell me. 90,000 plus 1 lakh 20, it will be 2 lakh 10,000. Yes or no? Please check. It is 2 lakh 10,000. Now check what is the status of my property in this year. So if in this year the status of my property happens to be LOP or DLOP, so this is the interest related to LOP, DLOP, entire 2 lakh 10,000 will be allowed. But in this year, if the status of the property was SOP, so entire 2 lakh 10,000 will not be allowed. It will be allowed subject to maximum limit of 30,000 or maximum limit of 2 lakh. What limit I will take? I will take 2 lakhs because the loan was taken on or after 1st April 99 for the purpose of construction, and construction got completed within 5 years from the end of the year in which the construction was, end of the year in which the loan was taken. So the loan was taken in 2021. End of that, I have to take 5 years. So can I say 1, 2, 3, 4 and another 31st March 2026. Prior to that only the construction got completed, no? So this is a special loan. On the special loan, whatever interest is there, that interest will be allowed subject to maximum 2 lakh if the property happens to be SOP. Done. 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 Will you remember? Now, in this concept, what difficulty they can put, they will tell you repayments. That 1 lakh 20 is repaid in this year. 1 lakh 20 is repaid in this year, for example, 31st December. Entire 12 lakh rupees, 1 lakh 20, 12 lakh rupees loan was there, no? So 12 lakh rupees entire loan is repaid in 24-25, 31st December. Possible, not possible? So no effect will be there on my pre-construction period. No effect was there, will be there on my pre-construction interest, because during the pre-construction period, entire period 12 lakh loan is outstanding. Hello. So this interest will not change. But can I say whatever interest due for 24-25, that will change now? Because till 31st December, I will pay interest on 12 lakhs. And the moment 31st December, I have paid 12 lakh rupees of loan. Now for January, February, March, I'm not going to pay any interest for those 3 months because I have already paid what? The loan amount. So my normal interest for this previous year, 24-25, will be 12 lakh into 10%, but only for 9 months. That will be 90,000. And wait, this 4 lakh 50 divided by 5, 90,000 will be the first installment in my year. So now 90 plus 90 will give me 1 lakh 80 instead of this 2 lakh 10,000. Hello, sir. Now what if they are saying that the 12 lakh rupees of loan was there, it is repaid here. 12 lakh rupees is repaid here. Can I say 31st December 2022, the entire 12 lakh rupees is repaid? Yes or no? So wait, if that amount is repaid in 22-23, will it affect my pre-construction period? No, period will remain same, 45 months. But I am not going to pay interest for the entire 45 months. I am going to pay interest for these 9 months, yes. I am going to pay the interest for these 12 months, yes. But as on 31st December 2022, if the entire 12 lakh is repaid, so can I say in the year 22-23, now I will pay interest only for 9 months. So 9 months, 12 months, 9 months will be 30 months interest only, amounting to 3 lakhs. 12 lakh into 10% for 9 months, for 12 months and for 9 months. Getting my point? But tell me, the moment you have paid 12 lakhs, will you pay any interest for these 3 months? No. Will you pay any interest for these 12 months? So for remaining 12 plus 3, 15 months, you are not going to pay any interest. But can you pay interest for these 9, these 3 and another 9 months? The answer is yes. So calculate for that. Only that will be your pre-construction interest. For next 15 months, 3 months and 12 months, there will be no interest, nil. So this amount will now change to 3 lakhs. Now divided by 5, it will be 60,000. Now that 60,000 will be first time claimed in 24-25. But in 24-25, there will be no interest due because the loan is already repaid. So normal interest due for 24-25 will be nil. But you are still going to get this 60,000 as a deduction in previous year 24-25. Are you understanding what I am trying to tell you all? If you have understood this base, no, now in this base only, they are going to give you repayments and all. Open your eyes, ears, and keep your mind open so that you don't end up calculating wrong amounts. Getting my point? The framework is this, but in this, they are going to give you n number of cases. This much is repaid, this much is still outstanding. One more example if I take, how much was the loan? Come on, tell me. 12 lakh. 31st December 2022, 10 lakh is repaid. So can I say for 9 months, I will pay interest on 12 lakhs? For 12 months, I will pay interest on 12 lakhs? But for 22-23, I will pay interest on 12 lakhs only till December. Because in December, 10 lakh is repaid, still 2 lakh is remaining. Hello? On that 2 lakh, for 3 months I will pay here, for 12 months I will pay here. So for 15 months, I will calculate on 2 lakhs. Getting my point? So 2 lakh into 10% into 15 upon 12 will give me 25,000 interest. So 3 lakhs plus 25,000. Now this amount will become 3,25,000. Divide by 5. That will be my 1/5. I can claim for the first time in 24-25. Now still 2 lakh is remaining. Can I say on that entire 2 lakh, interest will become due in my previous year? 2 lakh into 10% will give me 20,000 interest, normal interest for my previous year. And with that, 1/5 of 3,25,000 will be added for the first time. Got it? I've tried my level best to make this concept easier for you. And I hope I have succeeded in that. Please don't commit mistake in these calculations. Because these are the gray areas where the institute focuses more. Majority of the students get problem here only. Getting my point? But you are not supposed to be a majority, you are supposed to be a minority who are getting passed and getting ranks. Sure? Okay. So this is the end of pre-construction period. Now please pay attention. This is very, very, very important discussion. See, if you are an assessee who is individual, HUF, AOP, BY and AJP. So you have one option to shift out of 115 BSc. Otherwise, you will remain in the default scheme of 115 BSc. Yes or no? I told you 115 BSc is also applicable on these type of assessees. So if you shift out of 115 BSc, if you shift out of default tax regime, no, then while calculating your income from house property head, assessee is shifting out of 115 BSc, not following default tax scheme, yes or no? Then that assessee, while calculating income from house property, under the head house property, from let out property or deemed let out property, he can claim interest deduction. And for SOP also, he can claim interest deduction subject to maximum 30,000 or 2 lakhs, as the case may be. But if you start following 115 BSc, you are there in the default scheme now. Have you shifted out? The answer is no. You are still there in 115 BSc. Then please remember, while calculating your income from house property, in your income from house property, from your LOP, DLOP, whatever interest was there, you can claim. But from your SOP, whatever interest was there, which you were supposed to get up to 30,000 or 2 lakh, that deduction will not be available to you anymore. So this is the first drawback of entering in the default tax regime. If you follow default tax regime of 115 BSc, no. So while calculating your house property head, SOP interest will not be allowed as a deduction. So if you want to claim SOP exemption, SOP interest as what? Deduction, shift out of 115 BSc. Then only you will get. Now be very careful that while solving the question, if they are telling you that the assessee is following 115 BSc, and for that assessee, if SOP is given and still you are taking the interest deduction, you are gone. Because interest deduction is not available from SOP when you follow 115 BSc. But if in that same question they are telling you that assessee is shifting out of 115 BSc, he is not following 115 BSc, and SOP is given in the question, and from that SOP you can claim interest deduction up to 30,000 or 2 lakhs, as the case may be. Very important, very, very, very important. Done. Last point. Section 25 says that if you have taken a loan, housing loan, and on that housing loan you were supposed to pay what? Interest. But that interest was supposed to be paid outside India. Meaning that you must be a resident. You might have taken a loan from outside India, used that loan in India on a house property. On that loan amount, now you are going to pay interest to someone outside India. He is a non-resident, he is RNOR. Can I say that non-resident is earning Indian income from this resident? And that interest which the resident is giving is interest on that loan which this resident is using in India. So are you a resident? Yes. Are you using the loan amount in a house property in India? And on that housing loan, you are going to give interest to someone which is outside India, who is outside India, that non-resident, that RNOR or any person is earning interest from a resident in India on a loan which he gave and which was used in India. On that loan, if he is getting interest, don't you think that the interest which he is earning, that interest is Indian income for him? Section 9, deemed to occur or arise in India. On that, he is liable to pay tax in India. So he will first get the income, and then next year he will come to pay taxes. Will he come to pay taxes in India? Oh, so government next year will go there to take the taxes. No. Whatever taxes has to be taken, no, on this income. He is not going to come to India to pay those taxes. Neither the government can go there to collect those taxes. So who is giving them the income? You are only giving them the income, no? In the form of interest. From that interest income, deduct tax because you are the source of his income in India. At source only the tax will be deducted. And that tax, the government will tell you, from this interest deduct this much tax and deposit this tax to the government. First you are supposed to deduct and deposit this tax to the government so that his income, whatever interest income he is earning, from that income whatever taxes are there are deducted at source and paid to the government. Even if he does not come or government cannot go there, at least the tax on his Indian income is collected through you. That is the reason why you are given a responsibility to deduct TDS. But what you did? You did not deduct the TDS. Without deducting TDS, you gave the money. Or you deducted TDS, but you did not deposit that TDS in the government account. So remember, income for someone is expense for someone. And now this expense was interest on housing loan for you, which you were going to claim as a deduction under house property head, will be disallowed. If on this interest TDS you have not deducted, or TDS you have deducted but on time you have not deposited that TDS in the government account, then whatever interest on which the TDS was not deducted, whatever interest on which TDS is deducted and you have not deposited, that interest you cannot claim under section 24 clause B as your deduction. That interest will be disallowed. That is given in section 25. Disallowance of interest. Got it? So are you an assessee? Yes. Are you going to pay interest on housing loan outside India? Yes. On that, are you liable to deduct TDS? Yes. Deduct TDS and deposit that TDS to the government account on time. Whatever interest you have paid outside India, that is interest on housing loan, it will be allowed as a deduction. Why? Because you have deducted the TDS and that TDS you have deposited in the government account on time. But if you fail to deduct, or even you deduct and you fail to deposit also, then whatever interest on which this default is committed, that interest will not be allowed as a deduction under section 24B. This interest is disallowed. That is written in section 25. Done, sir? So we are now all set to solve good amount of questions. Shall we begin? Sure? Okay. Page number 3.151. ICI study mat. Illustration number 4. So in this question, a simple question is there. They have given you let out property without any vacancy. And now from that property, what is the taxable income which you are supposed to calculate? Sure? Shall we start now? First question I am solving with you, okay? Come on, see. Anirudh has a property whose municipal valuation is 1,30,000 per annum. Fair rent is 1,10,000 per annum. Standard rent is 1,20,000 per annum. Property was let out for a rent of 11,000 per month throughout the previous year. Meaning that from April to March the property is let out. Can I say the status of the property is LOP? Throughout the previous year means there is no vacancy. Okay. Unrealized rent was 11,000 and all conditions prescribed by rule 4 are what? Satisfied. Meaning that this unrealized rent you can claim as a reduction while calculating your GAV. From where we will reduce? We will reduce after calculating GAV. We will not reduce from actual rent. Okay, everyone? But alternatively, it can be reduced from actual rent also. Your GAV will be a little bit different. You will still get the full marks, but that will not be a logical answer. Hello, we discussed in the last lecture. Do you remember that? Okay. Now, he paid municipal taxes. See, they are saying he paid means who paid? Anirudh paid. Anirudh is the owner. And owner has paid, meaning actual paid. Yes or no? Municipal taxes at 10% of municipal value. Hello? Interest on borrowed capital was 40,000. Meaning interest on housing loan. It is 40,000. Now tell me one thing. Whatever interest is there, Is this interest for this let out property? Yes, that will be allowed fully. Very simple question, very simple. What we are going to do, we are supposed to take municipal value 1,30,000, fair rent 1,10,000, whichever is higher, 1,30,000. Yes or no? Then we will take standard rent 1,20,000, so higher amount 1,30,000 or standard rent 1,20,000, whichever is lower. So can I say my expected rent here will be 1,20,000, friends, everyone. And what will be my actual rent? Actual rent will be 11,000 per month into 12 months let out period. Yes or no? Will be 1,32,000. Everyone got this? Was there any vacancy? The answer is no. If there is no vacancy, actual rent or expected rent, whichever is higher. Higher is GAV. Come on, tell me, what is GAV now? 1,32,000. Now, out of this 1,32,000 GAV, we will reduce our unrealized rent amounting to rupees 11,000. Yes or no? So, our balance GAV, which will be finally taxable in our hands, will be 1,21,000. Everyone got this? From there, we'll get municipal tax deduction. How much is municipal tax? It is 10% of municipal value. What is municipal value? 1,30,000. 10% of that will be 13,000. So reduce this 13,000 out of 1,21,000. You will get 1,08,000. Can I say my NAV is now 1,08,000? Now I will get two deductions out of this. One is 24 clause A, standard deduction. Yes or no? 30% of 1,08,000. That amount will be 32,400. And another deduction I will get 24 clause B, interest on housing loan. Yes or no? How much is interest? 40,000, no? Entire amount will be allowed as a deduction. So if I reduce 40,000 also, I will get final answer 35,600. Can I say this is the taxable positive income? This is taxable income from this house property. And since Anirudh does not have any other house property, so whatever taxable income of this house property is there will be the taxable income under the head house property also. Hello? Can you please check the answer, friends? Final answer is 35,600. Yes? Yes? Or no? Final answer. Now please pay attention what I'm trying to tell you here. We reduced the unrealized rent while calculating GAV from the amount of GAV we reduced. Alternatively, it can be reduced from actual rent also. So if we would have reduced from actual rent, what would have been our answer? It would have been same because they have also reduced from actual rent. Please pay attention here. We got expected rent of 1,20,000. We also got it now. So here what they have said, actual rent, which was 1,32,000. From this actual rent only, they are reducing unrealized rent. So that final actual rent for them is 1,21,000. Now if you see expected rent or actual rent, whichever is higher, how much is that? 1,21,000 GAV. So for us also GAV was 1,21,000 only, no? So if we reduce from unrealized rent, if we reduce unrealized rent from GAV, then also final GAV taxable was 121. Here also it is 121. But sometimes this amount may differ. Huh? Sometimes this amount may differ. But this time it is fortunately same. Getting my point? In both the ways, our answer is correct only. Why? Because see, they have written alternatively, if as per the income tax returns, unrealized rent is deducted from GAV, then GAV would be 1,32,000, which came in our case also. GAV was 1,32,000. Out of that, 11,000 is reduced. Then thereafter, unrealized rent and municipal tax 13,000 would be deducted to arrive at the NAV of 1,08,000. Then from that NAV of 1,08,000, we are taking what? Two deductions, and our final answer is getting, we are also getting 35,600. So what we will be doing, we will be reducing from GAV, and we will write a note that in the above solution, unrealized rent we have reduced from the amount of GAV as per the treatment given in income tax returns. Alternatively, it can be reduced from actual rent also. Full stop. That's it. No need to make further calculations also. Getting my point? Hello? Shall I move ahead? Next question. Come on. Next question. Question number 5. Now this is a case where property is let out, but there is vacancy also. Okay? Come on. Ganesh has a property whose municipal valuation is 2,50,000 per annum, fair rent is 2 lakh, standard rent is 2,10,000. So can I say expected rent here will be 250 or 2 lakh, whichever is higher, 2,50,000, 250 or 2,10,000, whichever is lower, this will be 2,10,000 expected rent. Now actual rent here is the property was let out for a rent of 20,000 per month. So the property is let out and the actual rent is 20,000 per month. However, the tenant vacated the property on 31st of January 2025, meaning that from April till January for 10 months the property is let out, and for the rest 2 months the property is vacant. Yes or no? So 10 months is the let out period multiplied by 20,000. Actual rent will be 2 lakhs. Everyone? So now tell me, there is vacancy and there is unrealized rent also 20,000. Now I have two options. I can reduce this 20,000 from actual rent also, or I will first calculate GAV and from GAV I will reduce unrealized rent. Yes or no? So what we will do? First we will calculate GAV and from GAV we will reduce what? 20,000 of unrealized rent. Okay. Now tell me, is your actual rent higher than expected rent? No. If even after vacancy your actual rent was higher than expected rent, we would have taken actual rent only as GAV. Hello? But since your actual rent is lower than expected rent, so I will have to now see whether the reason for actual rent being lower is vacancy or not. So I will have to add 2 months vacancy rent in the actual rent to check that. So how much rent I would have received for those 2 vacancy months at the rate of 20,000? I would have received 40,000. Hello? That 40,000 plus this 2 lakhs will give me 2 lakh 40. After adding vacancy rent, I came to know that if I would have let out the property for entire 12 months without that 2 months vacancy, I would have received a rent of 2 lakh 40. That was more than your expectation, sir. That means vacancy is the reason why my actual rent is lower than your expected rent. Hello? So in that scenario, if AR plus VR is greater than or equal to ER, what I will take as GAV? I will take actual rent only as my GAV. Hello? So here my GAV is equal to 2 lakhs only. I will not take 2 lakh 40. 2 lakh 40 is what? Just for the sake of comparison. Yes or no? Either actual rent or expected rent. Any of these two amounts will only become my GAV. Yes or no? Now tell me, out of this GAV, now I will reduce unrealized rent. That was how much? 20,000. And all the conditions of what? Rule 4 are satisfied. That is why I am reducing this 20,000. So my balance GAV, my final GAV, which is taxable, is how much? 1,80,000. Everyone understood? Now out of this, I will get a deduction for municipal taxes, which are 8% of 2,50,000. 2,50,000 into 8%, that is 20,000. So 20,000 municipal tax I have reduced. My NAV will be 1,60,000. Everyone, out of this I will get 24 clause A standard deduction. So 1,60,000 into 30%, I will get 48,000. Is there any interest on housing loan? Yes. Interest on borrowed capital was 65,000. So 24 clause B, interest is 65,000. Reduce this, minus 65,000, I will get final amount 47,000, positive amount. This is the taxable income from house property. Everyone got this? Sure, friends? You did not get this answer. Where you committed mistake? Akshaya. Follow the process blindly, I am telling you. If you will try to do anything else, your GAV would be wrong, I guess. Yes or no? Come on. Shall we move on to the next question now? So this is the place where you should actually focus. Got it? This is a very easy question. Now the difficulty of the questions will increase. So today at home, sit properly, read this question again and start solving again. How to solve? Make a format, name of the assessee, individual, PAN, previous year assessment year, computation of taxable income from house property. Particulars, we know the format. For LOP, what was the format? Municipal value fair rent. Write down the entire format. Now from here only, take the amounts and put in that format. Got it? Now be careful that when you are comparing expected rent and actual rent, no, at that time, if there is no vacancy, whichever is higher. But if there is vacancy, of 2 months, which was given in our question, vacancy is there and my actual rent is for 10 months, which is only 2 lakhs. And expected rent is for 12 months, which is 2,10,000. So actual rent is lower than expected rent, no? What did sir, taught us in this scenario? What is to be done? I'm not recollecting. Go in the notes, check the notes, and again come back to this. Now again solve. Sir said that when actual rent is lower than expected rent, I will have to add the vacancy period rent in the actual rent. So actual rent plus vacancy rent both taken together, if this total amount is equal to or higher than expected rent, then I have to take actual rent only as GAV. But even after adding the vacancy rent, the total is still less than expected rent. Then actual rent I will ignore. I will take expected rent as GAV. That's it. Sure? Here only you would have committed the mistake. And once you get the GAV, from that you take the unrealized rent. Alternatively, it can be reduced from actual rent also. So in that case, your actual rent would have been 2 lakh minus 20,000, 1 lakh 80. Then you again add what? Vacancy period rent, 2 lakh 20. 2 lakh 20 is still higher than 2 lakh 10, no? So actual rent of 1 lakh 80 will be taken as my what? GAV. If I would have reduced unrealized rent from actual rent. Got it? And here also I am getting what? 1 lakh 80 only as my GAV, no? If I reduce unrealized rent from GAV. Getting my point? Sure. Shall we move on to the next question? Come to question number 3 now. Question number 3. Now this is a question where 2 SOPs are there. Wait. Please listen to me carefully. 2 SOPs are there. And both the SOPs have interest. And in the question they are mentioning that the assessee is shifting out of 115 BSE. If you shift out of 115 BSE, will you get interest deduction? Yes. If you shift out of 115 BSE, you will get interest deduction from SOP. But if you remain in 115 BSE, you will not get any deduction for interest. Hello? Just now only we have done, no? See, if one question is wrong, no? Don't worry. It happens. With everyone it happens. Okay? Even I did not learn at my first, attempt. Even I did not learn. I had to do it again and again. Only then I learned. So if in one concept I am doing a mistake, that does not mean that my entire chapter is gone. Have that confidence. Okay, this point, no, I committed mistake. I know other points. Have confidence in that. Got it? Please pay attention. Now, in this question, they are telling you two SOPs are there. Both the SOPs are having interest on housing loan, interest on housing loan. Will you get any deduction for interest on housing loan if you shift out of 115 BSE? Yes. Then from SOP, whatever interest is there, you will get the deduction for that. Maximum 30,000 or 2 lakh as the case may be. But if you don't shift out, you remain in 115 BSE, you will not get any deduction for interest. Interest deduction will be 0. Then your SOP final income will be 0. But what if you shift out? Will you get interest deduction? Yes, maximum 30 or 2 lakh as the case may be. Then your SOP income will be negative. Got it? So in the question, see, I have highlighted, they are saying that if he exercises the option of shifting out of the default tax regime, meaning that is he following 115 BSE or not following? Not following 115 BSE. If not following 115 BSE, interest on housing loan deduction will be available? Yes. So calculate that interest on housing loan deduction they are telling you. See, compute the deduction which would be available to him under section 24B in respect of interest payable. They are telling you to calculate the interest on housing loan deduction which is available because you are not following 115 BSE. But if they would have kept the question same and told you that he was following 115 BSE, then your answer should have been directly nil. Got it? Everyone? Shall we? Come on. See. Mr. Manas owns two house properties, one at Bombay wherein his family resides. Bombay, his family resides means self-occupied for residential purpose, Bombay house. Other at Delhi which is unoccupied. Unoccupied means remaining vacant. So the property which is self-occupied but kept vacant is also SOP only, no? So Delhi property is unoccupied, that is also SOP. Bombay property where the family lives, that is also SOP. Two SOPs are there, Delhi and Bombay. He lives in Chandigarh. Oh, third place, Chandigarh. For his employment purpose in a rented house. Thank God in Chandigarh he is not having his own house. So Manas is having only two houses which he owns. One in Bombay, one in Delhi. And both the houses are SOPs. Yes or no? Chandigarh is the rented house. He is not the owner of that house. So forget about Chandigarh house. Chandigarh house will not come under the head house property because it is his rented house. He does not own that house. Getting my point? Next one. For acquisition of the house property at Bombay, he took a loan of rupees 30 lakh at 10% per annum on 1st April 2023. He has not repaid any amount so far. In respect of the house property at Delhi, he has taken a loan of rupees 5 lakh at 11% per annum on 1st October 2023 towards repairs. Very simple. Now from these informations, they are telling you to compute the interest on housing loan deduction available for house 1, house 2 and the total deduction available under section 24 clause B. Getting my point? SOP 1, SOP 2 both taken together cannot be more than 2 lakh. Do you remember? That same concept is there. But wait, how will you present it? Okay, now. See, can I say SOP at Bombay is there and another SOP at Delhi is there. Sure? Both the SOPs, the GAV will be nil. And from that, interest on housing loan deduction will be there. Then the final amount will be a loss. But they are not telling you to calculate income from house property or loss from house property. They are telling you just calculate the interest which is available for these two taken together. Yes or no? But in that same question, if they would have told you compute the house property income, if you are having these two houses, then simple, GAV nil, municipal tax nil, NAV nil, minus 24 clause A nil, interest on housing loan which you are going to calculate now, take that as a deduction and final income will be negative, negative. Hello? Getting my point? Sure. So what we are going to do now, we are supposed to calculate. We will be calculating as if they have told us to calculate the final income of these two properties. And ultimately in that, there will be a working note for interest on housing loan deduction also. Yes or no? So both the purposes will be solved. Getting my point? Wait. So I will take GAV. For this property also I will take nil. For this property also I will take nil. And you will have to write down a note that annual value of any two SOPs at the option of the assessee is exempt under section 23(2). Hence, the GAV of both the properties belonging to Manas has been taken as exempt. Taken as nil. Yes or no? Can you write down such type of note? Minus any municipal tax paid, even if it was paid, was not allowed as a deduction because municipal taxes relating to the property for which the SOP exemption is claimed is not allowed as a deduction. Yes or no? So here I will have to take nil. I will have to take nil. No municipal tax deduction also. Okay, sir. Now I will take NAV. How much is NAV? Nil minus nil on your calculators, please. How much you are getting? Nil minus nil. Are you getting nil? Sure. Now take 30% of that nil. 24 clause A said 30% of NAV. 30% of NAV. Nil. 30% will be how much? Nil only, no? Now minus here 24 clause B. They are not telling you to compute the house property income. They are telling you that how much deduction will be available under section 24B. That is the question asking from you. Getting my point? But we are solving as if they are asking us to calculate the loss from each property. Got it? So 24B, how much deduction will be available here and how much deduction will be available here? But we have to remember, both these taken together cannot be more than 2 lakhs. Both taken together cannot be more than 2 lakhs. Hence, whatever loss will be coming, that loss from both the house properties taken together cannot be more than 2 lakhs. Yes or no? So now come. See, SOP1, what was the interest? Interest on housing loan, which was taken for Bombay property. The loan was taken on 1st April 2023. Please check the question. What was the amount of loan? 50 lakhs. On that 10% interest was there. Hello? So 50 lakh into 10% will be 5 lakh. Can I say if that loan is, 30 lakhs. 30 lakhs, no, it was 30 lakhs. 30 lakhs. On that 10% will be 3 lakhs. So if nothing is mentioned, then that 30 lakh is entirely outstanding. Yes or no? But they have mentioned it clearly that that loan is still outstanding. Can I say in my previous year, the loan for Bombay house property, entire year that loan is outstanding? On that 30 lakh, I will have to give interest for this year amounting to 10%, meaning 3 lakh rupees. So can I say this 3 lakh rupees is interest for this year for Bombay property? And Bombay property, this loan was taken to purchase Bombay property. Tell me, the loan was taken on 1st April 2023, meaning that after 1st April 99, to purchase or construct, meaning purchase of house property. If nothing is mentioned, purchase happens immediately, no? So within 5 years, the purchase activity got completed. So loan is a normal loan or a special loan? Special loan. On that, the interest will be 2 lakhs maximum. So maximum amount of interest under section 24B for this loan will be, this loan interest will be 2 lakhs. So 3 lakhs or 2 lakhs, whichever is lower, your interest deduction here will be 2 lakhs. Got it? Now they are saying that this Delhi property is there. Delhi property, you have taken a loan of rupees how much? 5 lakhs, no? At the rate of 11% last year. And even that loan is outstanding in this year. So on 5 lakh, 11% you will calculate, you will get 55,000. Can I say this 55,000 is interest on housing loan which was taken for repairs? It is given there. So repairs loan maximum interest will be how much? 30,000, no friends. So 55 or 30, whichever is lower, you will get 30,000. Everyone. But wait, if you will write 2 lakhs over here and 30,000 over here, don't you see both taken together exceeds 2 lakhs? So here your loss will be 2 lakh and there your loss will be 30,000. Getting my point? Both these taken together cannot be more than 2 lakh, meaning that if you are claiming this 2 lakh, you will have to forget that 30. Or if you are claiming this 30, you will have to forget 2 lakh, you will have to take 1 lakh 70. So that the total loss does not exceed 2 lakh also. Getting my point? So tell me, if I'll claim 2 lakh or 30, yes or no? 2 lakh or 30, the total will be 2 lakh 30, which cannot be more than 2 lakhs. So this or this, whichever is lower. So total interest for both the SOPs taken together cannot be more than 2 lakh. So the loss under the head house property will be now how much? 2 lakh rupees maximum. This way, can you present your answer? Sure, sir. Easy, no? Very good. Come on. Now let's come to the... Now wait. In that question only, should I twist a little bit? In that question, if they are telling you that assessee is following 115 BSc, shift is not shifting out, he is following 115 BSc, then you will go here, you will not write down these limits. Okay, first you will calculate what? Interest. First you will calculate interest and you will put these interest in the box and you will say disallowed, since assessee follows 115 BSc. Yes or no? Since assessee follows 115 BSc, both are disallowed. Hence, here also interest will be nil and here also interest will be nil. So my dear friends, here it will be nil, here it will be nil. There will be no loss. Final income from both the house property will be nil only. Got it? Sure. Let's move to the next question. Come on. Illustration number 3 is done. See, question number 2 is pending. 2 I will pick up a little bit later when I teach you house properties situated outside India. That time we'll do question number 2. So 3 is done, 4 is done. Everyone, 3, 4 done and 5 also done, no? 3, 4 is also done and 5 is also done. Okay. Now illustration number 6. Good question. Now in this, SOP and interest is not there. SOP and pre-construction interest is also there. Okay. Shall we start? Purna has one house property at Indiranagar in Bangalore. She stays with her family in the house, meaning the house property is SOP. Okay. Next one. The rent of similar property in neighborhood is 25,000, meaning this is fair rent given for the property. There is no use of this fair rent to me. I would have used this fair rent if the property would have been what? Let out property, no? Hello? If the property is SOP, fair rent, standard rent, municipal tax, whatever given for this property will become irrelevant for me. Even the municipal taxes paid for this property will not be allowed as a deduction. So why they have given? They have given all such information to confuse you. Getting my point? So don't get yourself confused. Okay? Come on. Municipal value is 2,80,000 per annum. No use. Municipal tax is 8,000. No use because the property is SOP. Now, whatever information is there, this is important. The house construction began in April 18. with a loan of rupees 20 lakh taken from SBI Housing at 9% on 1st April 18. So this house you constructed by taking a loan. But the construction of this house you started in 2018. On 1st April, you took a loan to construct this house. So date of borrowing was 1st April 2018, yes or no? On 1st April 2018, you were not having this house property. This house property was under construction. So can I say that in the previous year, 2018-19, 1st April you took the loan, 1st April 2018. So for the entire year 18-19, 12 months, you would have paid interest, but that interest was not allowed to you because that year the construction was going on. No house property, no annual value. So this interest was not allowed in 18-19. Then in the next previous year also, 19-20 also, the construction was going on. And finally the construction got completed in previous year 2021, they are saying. Please check. The construction was completed on 30th November 20. So in the previous year 2021, now you have house property. Now you will calculate annual value also from 2021 onwards, and whatever interest starting from this year will be allowed as a deduction in the same year itself. But what about the interest for these 12 months and these 12 months, 18-19 and 19-20? Can I say interest till 31st March 2020 starting from date of borrowing, which was 1st April 2018, starting from that date till 31st March 2020. The 31st March immediately preceding to date of completion of construction. Date of completion of construction was 30th November 20. Immediately prior to that, 31st March 2020. So from the date of borrowing, 1st April 2018 till 31st March 2020, whatever interest was there, that was not allowed as a deduction because in that period there was no house property. So this interest starting from 18-19 to 19-20, this is my pre-construction interest. So how much interest? 20 lakhs into 9% for the first year and 20 lakhs into 9% for the second year. 1 lakh 80, 1 lakh 80. Total should be how much? 3 lakh 60 that they have only calculated and given to you. Check. So this way your examiner is becoming sweet. What you are supposed to tell your examiner? Thank you. You have yourself calculated pre-construction interest and given it to us. You did not even put us in the trouble to calculate this 3 lakh 60. You only calculated and gave it to us. Now apply some mind. Pre-construction interest 3 lakh 60. If they would not have given, you would have also calculated the same amount. Now this 3 lakh 60 is the total pre-construction interest for this pre-construction period, will be allowed in 5 equal annual installment. Can I say 1/5 of this will be 3 lakh 60 divided by 5 will be 72,000 everyone? Yes or no? 72,000 will be allowed for the first time in the year in which the construction was completed. So what was the year in which the construction was completed? 2021. So 72,000 you have already claimed in 2021. Then 21-22. Then 22-23. Then 23-24. And can I say 72,000 last time you will be claiming in our previous year? And have they told you that you have repaid that loan? No. So that entire loan of rupees 20 lakh is still outstanding. So on that 20 lakhs, will I pay 9% interest for this year also, 24-25? So what will be the normal interest becoming due on this 20 lakh loan for my previous year? It will be 1 lakh 80,000 only. Hello, sir. entire 20 lakh remains outstanding for my previous year also, no? 24-25. So 24-25, 20 lakh rupees is outstanding. On that 9% interest for the entire 24-25 is the normal interest for this year. 1 lakh 80 plus 72,000, 1/5 amount of pre-construction interest coming for the last time in my previous year, 5th installment. So how much is the total interest? 2,52,000. Hello, sir. Got it? Sure. So now in my previous year, 24-25, the interest which is due on the loan outstanding in this year is how much? 20 lakhs into 9%, which is 1,80,000 plus the 1/5 of pre-construction interest, which was how much? 72, and this is the 5th and final installment, 72,000 coming in my previous year. So total interest which is for my previous year is not 180 now, it is 2,52,000. Now tell me, was the loan taken on or after 1st April 99? Yes, loan was taken on 1st April 18. Hello. For the purpose of construction, and construction got completed within 5 years from the end of the year in which the loan was taken. Yes or no? So loan is a special loan. On that loan, whatever interest is there will be allowed subject to maximum 2 lakhs. So what interest is there? 2,52,000, and in this year, 2,52,000 interest is for this year, and this year this interest is for the loan which you have taken for this Purna's SOP, no? So this SOP, there was a housing loan. On that housing loan, this is the interest. This interest will be allowed subject to maximum 2 lakh rupees. This or this, whichever is lower. Tell me how much will be the deduction? 2 lakh. And what will be the final income, you know? Nil, 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 nil. 2 lakh. Loss of 2 lakhs. Because Purna's one SOP, Purna will claim it as exempt only. And since Purna is not following 115 BAC, she is shifting out. She is going to get this deduction of 2 lakhs. So what will be the final income? Come on, they are telling you. Compute Purna's income from house property. How will you compute? You will write name of the assessee Purna, status individual, then status individual ROR, then PAN dash, previous year 24-25, assessment year 25-26, computation of income under the house property, particulars, and in the column you will write Purna's SOP at Bangalore. SOP at Bangalore. For this SOP you are calculating, no? So in the heading you will write SOP at Bangalore. If she would have had one more property, then the calculation would have been same. So one more column we would have added. What? Other property at some other place. So this calculation is for SOP at Bangalore. This calculation might be for Chennai property. This calculation might be for Bombay property. Yes or no? Because everywhere the format remains same. We just have to do the same calculation for different property. So why to make multiple formats? In one format, I can cover multiple properties, no? So one format will be made for this one property. Yes or no? What I will write? SOP at Bangalore. I will directly start from GAV. I will not write municipal value, fair rent, etc. I will directly start from GAV. And in the bracket, I will write note. What? As per section 23(2), the annual value of any two SOPs at the option of the assessee is exempt. Hence, SOP of Purna's SOP, the annual value of Purna's SOP at Bangalore is taken as nil. Hence, the municipal value, fair rent and municipal taxes of the Purna's property SOP have all been ignored. And we have taken GAV as nil. That you are supposed to take as a note. Municipal tax not allowed as a deduction because for SOP, municipal tax deduction is not available. So NAV will become nil. 24A, nil. Interest on housing loan deduction, we have calculated. Write down this 2 lakh rupees negative. What final amount you will get? Negative 2 lakh. Is it a taxable income or a loss from house property? Loss from house property. So this is the loss of the house property. If I have other property having positive income, from that, this loss will be adjusted. But there is no positive income because there is no other positive property. Yes or no? So this is the only property under this head giving me a loss. So this loss will now become the loss of my head. Loss under the head house property will be 2 lakhs. Hello sir. Difficult? I explained, you understood. I'm explaining the same things which I have already taught you. But the correct things should strike you at correct time. Hello. 8 months pre-construction interest. How come 8 months pre-construction interest is coming, Kani? 1st April 2018 you have taken the loan, no? So pre-construction interest will start from date of borrowing 1st April 2018. So how much interest you have paid in 18-19? 12 months. How much interest you have paid in 19-20? Tell me. Don't look at the date of completion of construction. Whatever interest you have paid in that year, April to November, becoming due in that year, will be allowed in that year. You are supposed to take pre-construction interest till 31st March. Hello? What mistake you are doing, you know? You are taking the pre-construction period, you are stretching the pre-construction period till date of completion of construction. Why are you taking there? I told you to end your pre-construction period on 31st March. Immediately prior to date of construction of completion of construction. Because whatever interest which will become due in the year of construction, no, April to November and after November, that entire interest become due in that year will be allowed in that year. And if you are taking that interest as a part of, taking the interest of 8 months as a part of pre-construction interest, you are trying to claim that interest for the second time as a part of pre-construction interest. Hello? Understanding? Sure? Now please don't commit this mistake for the second time, okay? Come on. Now let's go to next question. Let's see what type of question it is. Okay, now it is partly let out, partly self-occupied. More than 2 SOPs. This is very interesting question. Mark this question important. Start solving. First of all, tell me, these 3 SOPs are there. Please look at me here. 3 SOPs are there. Annual value of all the 3 SOPs exempt or any two. Then the third will become DLOP. Now you are supposed to tell that which 2 SOPs you will claim exempt and which third property you will tell DLOP. So now you have 3 options. 1 and 2 SOP, then third will be DLOP. If you say 1 and 3 as SOP, then 2 will become DLOP. And if you say 2 and 3 SOP, then 1 will become DLOP. Now you'll have to make 3 calculations. You have 3 houses. Okay. First I'll read the question. Okay. Ganesh has 3 houses, all of which are self-occupied. Particulars of all the houses are given: municipal value, fair rent, standard rent, when the completion or purchase of the house was completed, yes or no. Then municipal taxes of the houses are given. Interest on money borrowed for repair of property. That means for house 2, you have taken a repairs loan. On that, interest is given 55,000. And for house 3, you took a purchase loan. On that, the interest is 1,75,000. So house 3 loan is a purchase loan. On that, interest is 75,000. Everyone understanding? And house 2 loan is repairs loan. On that, the interest is 55. There is no housing loan for property 1. Getting my point, everyone? Sure? Now pay attention. Wait, see. Now compute Ganesh income of house property and suggest Which house should be opted by Ganesh to assess as self-occupied so that his tax liability is minimum? Read the question properly. Minimum tax liability should come. So pay attention here. Three houses are there. First, let's make assumption. We are making a first assumption. Assumption 1. That let's assume all house properties are what? DLOP. So if house property 1 is DLOP, what will be the income? If house property 2 is DLOP, what will be the income? And house property 3 is DLOP, what will be the income? First, let's make this assumption. Okay. Now, can I say H3, H2 and H1? Okay. Municipal value, fair rent, higher amount compared with standard rent. This is higher, this is lower. You will get expected rent. And friends, there will be no actual rent over here because all the properties are SOP, but we are in this assumption treating all of them as what? DLOP. So deeming the property will not allow you to earn the rent. There will be no actual rent. Getting my point? So whatever expected rent will come, no, that will directly become what? GAV. And there will be no unrealized rent also. Getting my point? So GAV, directly expected rent will be taken as GAV. Now pay attention over here. Please look at this thing. Don't worry. I will pass on the notes also to you. But pay attention. Now from this GAV, what you will do? You will reduce municipal taxes. You will get NAV. And from that you will take two deductions, 24 clause A standard deduction and 24 clause B interest on housing loan. Yes or no? This is 30% standard deduction and this is interest on housing loan. Sure? Now final incomes you will get for all the properties. Assuming that all the properties are DLOP. Now what we are doing, please check. 3 lakh, 375, 350. 3 lakh, 375 and 350. Okay. Come on, tell me 3 lakh or 3 lakh 75, whichever is higher. 3 lakh 75. 3 lakh 75 or 3 lakh 50. Hello, whichever is lower. 3 lakh 50. Is there any actual rent? No, actual rent not applicable here. Okay. So whatever expected rent will be there, that entire amount will become your GAV. Hello. Can you see municipal tax for this property is paid? How much is the municipal tax? That is 12% of municipal value. So 12% of 3 lakh will give you 36,000 everyone. So your NAV here will be 3,50,000 minus 36,000. 3,14,000 will be your NAV. And can I take 30% of that? That is 94,200. Hello. And there is no loan which is taken for house 1. So there is no interest on housing loan. Yes or no? So reduce that. You will directly get how much? 2,19,800. This is the income of house property 1. If you treat this house property as what? DLOP. Getting my point? Now let's assume that if we treat house property 2 as DLOP, what will be its final income? Hello sir. Sure, no? Come. House property 2. 3 lakh 60, 2 lakh 75, 3 lakh 70. 360, 275, 370. 360, 275 and 370. Please check the amounts. Amounts are correct, no? 360, 275 and 370. Yes, correct. Now whichever is higher, 3 lakh 60. 3 lakh 60 or 370, whichever is lower, 3 lakh 60. Everyone, dash. Can I say here my GAV will be 3 lakh 60? And can I say now 8% of 3 lakh 60, 3 lakh 60,000 into 8% will be 28,000. That is municipal tax. Municipal tax is allowed if the property is treated as what? DLOP, no? Hello. So minus the amount from 3,60,000, you will get 3,31,200. And for this, you are supposed to take 30%, that is 99,360. Everyone, 99,360. Yes or no? Now, is there any loan taken for this house? Yes, that loan was repairs loan. And on that, interest is 55,000. Can you see? That entire 55,000 you cannot claim. You can claim maximum 30,000. So, if you do it, no, you are gone. You do it only if you treat the property as what? SOP. Are you treating this property SOP? Or it is DLOP? So for DLOP, whatever loan is taken, on that whatever interest is there, that entire interest is allowed, no? Ayyo. Understanding? Don't take 30. Take the entire interest, because the property, you are treating the property as DLOP. As if the property is DLOP, entire interest will be allowed. So 55,000. So 3,31,200 into 30% will give you 99,360 minus what? 55,000. You will get 176,840. Everyone getting 176,840. Tell me yes or no. Sure. Now come to this part. House 3. House 3. This is 330, 380, 375. 330, 380 and 375. Come on, whichever is higher, 380. 380 or 375, whichever is lower, 375. There is any actual rent? No. So can I say 375 will become my GAV? Yes. Now, please check. 6%. 6% of 3,30,000. So 3,30,000 into 6% will be 19,800. Now 3,75,000 minus 19,800 will give you 3,55,200. Take 30% of that. You will get 1,06,560. And there is one loan which was taken for house property 3, and that was purchase loan. And on that, interest is 1,75,000. Allowed subject to maximum 2 lakh or 30,000. This is DLOP. So full interest without any limit will be allowed 1,75,000. Now if you calculate, you will get 73,640. This is first calculations which you have done. Now the second calculation you are supposed to do, assumption. Assumption number 2. That assume that all house properties are what? SOPs. And wait, now here also you are supposed to make two assumptions. If all house properties are SOP, you are following 115 BSE or you are not following 115 BSE. If you are following 115 BSE, hello? If you are following 115 BSE, then for these house properties, the income will be nil, 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 nil. No interest deduction. Hello? Getting my point? So if assumption 2 is that all the house properties are SOP, in that I am assuming that, for example, 115 BSE was followed. Then there is no interest deduction. Yes or no? No interest deduction for any of the house properties. If the house property is treated as SOP, from that interest deduction will not be allowed. Why? Because 115 BSE you are following. Yes or no? So everything will be nil, 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 nil. Even interest, whatever interest is there, even that will not be allowed. Interest will also be nil. So final income from all the properties will be nil, 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 nil. Hello? So house 1, the final income will be nil. House 2, final income will be nil. House 3, final income will be nil. This is when you follow 115 BSE. Now what if all the properties you are treating as SOP, what will be the income of first property if it is SOP? And you are not following 115 BSE. Yes or no? So now what you will do? Second assumption, you will take 115 BSE. No, you will not take 115 BSE. That means Now interest on housing loan deduction you are supposed to get. Hello. So from H1, which is 0, 0, 0, everything 0, 0, 0, 0. Yes or no? H1, H2, H3, all the incomes will be 0. But finally, interest on housing loan deduction you can claim, no? So for first property, there was no loan, so no interest. So here, the final income will be nil. Second property, there was repairs loan, and on that 55,000 interest is there, but that will not be allowed fully now. Because now H2 you are treating as what? SOP. H2 you are treating as SOP. So SOP interest is how much? 55,000. But that interest is on housing loan which was repairs housing loan, no? So 55,000 will be allowed subject to maximum 30. So here 30,000 loss will come. 30,000 interest will be allowed. 30,000 loss will come. Yes or no? Now if you treat house property 3, if you treat house property 3 as what? SOP. So from there also everything is nil. Interest will be allowed 1,75,000 subject to a maximum limit of 2 lakhs because that was a purchase loan taken in 2017 on or after 1st April 19. Purchase loan taken, if nothing is mentioned, purchase it done within 5 years. So special loan is there, on that interest is 1,75,000 will be allowed subject to maximum 2 lakhs. So here entire 1,75,000 will be allowed as a deduction. So your loss from this property will be 1,75,000. Getting my point? So this is house property income. If each house property was separately treated as what? If this first property is treated as SOP, its value is nil. If second property is treated as SOP, its final loss will be 30. If third property is treated as SOP, its final loss will be 1,75,000. Everyone getting my point? Now, if the assessee follows 115 BAC, what did I say? If the assessee follows 115 BAC. So what we are supposed to do? We are supposed to take this table and we are supposed to take this table. Both the tables we are supposed to combine. Yes or no? Now, in this, we have 3 options. First option, second option, and third option. What is my first option? You know, this is my H1, this is my H2, and this is my H3. H1, H2, H3. In the first option, what I will do, you know, I will consider house 1 and house 2 as what? SOP. Then 3 I will have to consider as what? DLOP. Yes or no, sir? I will shift it a little bit this side. Why it's not working? Wait. I will write down little bit this side. If I follow 115 BSE, same thing I am writing, but shifting this side so that I get the final total column also. Yes or no? So my first option will be there. My second option will also be there. And my third option will also be there. This is my H1. This is my H2. And this is my H3. And I will have one more column of total. If I treat house 1 as SOP, house 2 also as SOP, and house 3 I will have to treat as DLOP. Now tell me, if I follow 115 BSE and treat house 1 as SOP, what will be my income? Nil. I treat my house property 2 as SOP, what will be my income? Nil. Because under 115 BSE, I will not get any interest deduction. All the properties, there will be nil. Yes or no? So here, can I write SOP income will be nil? SOP income will be nil. Now, house 3 I am treating as what? DLOP. So I will have to go to the first column. Sorry, first table. Can I say house 3, if DLOP, then its income will be 73,640. So I will go and write 73,640 here. Now can you total nil plus 73,640? Your total will be 73,640. Now if you choose this option, no, treat house property 1 and 2 as what? SOP and 3 as DLOP, your final taxable income under the head house property will be 73,640. Now what second option you have? Come on, tell me. Second option you have, treat this as SOP, treat this as SOP, but this will become DLOP then. So if this is SOP, its value will be nil. This is SOP, then this value will be nil. Because under 115 BSE, SOP, no interest will be allowed. Final income will be nil only. Yes or no? Now house 2 is DLOP. Can you see house 2 DLOP? House 2, what will be the income if it is DLOP? 176,840. So can I say 176,840 will be the income? Now nil plus 176,840 plus nil, your income will be 176,840. Are you all getting me? Now tell me, compared to this, first option is better, no? If I treat house 2, house 1 and house 3 as what? SOP, then I will have to show house 2 as DLOP. In that case, my taxable income will be 176,840 and I will have to pay more tax. Which option is better? Option 1 is better or option 2 is better? Anytime option 1 is better, I will not take option number 2. Hello, sir. Now come to the third option. What third option I am having? I will now treat this property as SOP and this also as SOP, which will give me nil income only. Yes or no? Then I will have to take this property as DLOP. Now check. If house 1 is taken as DLOP, what is the income? 2,19,800. 2,19,800. Then the final income will be 2,19,800. This is the worst option which I can take, because I am going to pay tax on 2,19,800. Option 2 was better than this. Hello? But can I say option 1 is best of all? So what will be my suggestion to my client? That we will show house 1 and house 2 as what? SOP, and we will show house property 3 as DLOP. And in that case, our taxable income from house property will be only 73,640. Yes or no? So this is my conclusion. Conclusion is what? Come on, tell me. H1 and H2 will be treated as SOP. H3 will be treated as DLOP. And in that case, my income from house property taxable will be 73,640. And this is my conclusion if I follow 115 BSE. But what if I don't follow 115 BSE? Then I will use this table and now this table. Hello? Now my SOP incomes will not be nil. Because if I follow 115 BSE, then it is nil. But if I shift out of 115 BSE, then I will get interest deduction. Then it will be nil, -30 and -1,75,000. Hello? So the same table which I made with pink color, now I will be making with green color. Assuming that the assessee is not following 115 BSE. Yes or no? So now what I will do? Come on, tell me. Now I am assuming that assessee is not following 115 BSE, meaning that now he again has three options. Option 1, option 2 and option 3. H1, H2, H3 and total column. Come on, option 1. SOP, DLOP. Hello. Now tell me, SOP. Can I say first is SOP, then the income is nil? Second is SOP, then the income is -30. And both taken together, the interest does not exceed 30 also. Interest for first is nil, interest for second is 30. Both taken together, interest does not exceed 30. Hello. So can I say here I will write nil and here I will write negative 30, and house 3 is DLOP first table. How much is that? 73,640. I will write 73,640. Now how much tax I will pay? Here it will be 43,640. I will have to pay tax on 43,640. This will be my taxable income if I treat house 1 and house 2 as what? SOP and 3 as DLOP. Now what is the second option with me? Come on, tell me. This I will treat as SOP. This also I will treat as SOP. Then I will have to treat this as DLOP. Sir, understanding, getting inside your mind or going above your mind, above your head, getting inside your mind, no? Come on. 1 and 3. Can I say 1 and 3 now? Both taken together, interest is not going more than 2 lakhs. Getting my point? So the loss is also not going more than 2 lakhs. Yes or no? So will I write nil here? Yes. Will I write 1,75,000 here? Yes. So what will be the DLOP income? House property to DLOP income is 176,840. Come on, 176,840. Now it will give me 1840 taxable. Can I say this is more better than option 1? In option 1, I was supposed to pay tax on 43,640. In this option, my only taxable income will be 1840. Now let's see option 3. What option 3 says? This will be SOP. This will be SOP. So I will have to treat this as DLOP. If this is SOP, negative 30. This is SOP, negative 175. Both taken together cannot be more than 2 lakhs. So I will have to restrict the loss to the extent of negative 2 lakhs. Yes or no? Now come first property, 2,19,800. So 2,19,800 minus 2 lakh will give you 19,800. See, this is better than the first option, but still not better than the second option. Getting my point? So what conclusion? Come on, tell me. Option 2 I will choose. Here conclusion will be H1 and H3 I will show as SOP and H2 I will show as DLOP. Yes or no? In that case, my income from house property taxable for me will be 1840. Hello. Now they are telling you from the point of view of taxation, which is the best thing which you can do. See, if you follow 115 BSE, then this is the best option. But still you are supposed to pay tax on 73,640. But if you don't follow 115 BSE, so this is the best option and you are supposed to pay less tax because the taxable income is 1840. Now what will be your final conclusion? What will you tell your client? Will you tell him to follow 115 BSE? If he follows 115 BSE, no? So he will have to pay, he will have to show this amount as taxable income. This option he will have to choose lowest amount under this option, and that also 73,640 he will have to pay tax. But if you will give him the option, if you will give him the advice that don't follow 115 BSE, shift out, and in that we will have this best option, and under this option you are supposed to pay tax on 1840. So what will be your final suggestion to your client? Don't follow 115 BSE. Show house property 1 and house property 3 as what? SOP, and house property 4, sorry, not house property 4, house property 2 as what? DLOP, so that your income from house property taxable for you is only 1840. This will be ultimate final conclusion which you will give. How was this question? Come on, tell me. Nice, no? 3 times calculations. What if 4 properties are given? So now all the 4 properties DLOP, all the 4 properties SOP, 115 BSE, no 115 BSE. Then now there will not be 3 options. Now there will be 4 options. First option, house 1, house 2, SOP. Then 3 and 4 will become DLOP. Likewise, you will have to make the combinations. Getting my point? But don't worry, at the most they will give you 3 properties only. And they are not going to ask you under both the schemes, default 115 BSE as well as no 115 BSE. They will ask you any one. And such kind of question will come for at least 6 to 8 marks. Getting my point? Sure. Let's move ahead. See, final answer. Final answer 1840. Got it? Okay. Now let's come to the next question. But before next question, we'll be having some discussion. Cone properties there. Okay. Here you are having co-ownership, partly let out, partly self-occupied, area, outside India, and co-ownership. Okay. Done. Now see, we will discuss few more concepts. Okay. We are going to discuss few more concepts. And then again, whatever pending questions are there, we are going to solve those questions also. But basic, these type of questions will come in the exams. Understanding? Now they will do mix and match from these questions only. Some information from this question, some information from this question, they will mix and form a new question. Will you be able to do it? Now pay attention. I will be discussing one concept of partly let out and partly self-occupied property based on time, or it can be based on area also. Based on time, based on area. Based on time means what? This is your previous year. For 9 months, the property is let out, and for 3 months, the property is self-occupied. Come on, tell me. Is it possible? Possible or not possible? Can you give double status to this property? In this year, no, one property or part of the property can have only one status. Single year, single property cannot have double status. So single year, single property cannot have double status just because it was let out for some time and self-occupied for some time. Give only one status. And that status which you can give no to this property cannot be SOP. Because I told you 3 types. Remember? Full year used for residence, only then SOP. Full year unoccupied means kept vacant, then also SOP. Part of the year used for residence, part of the year kept vacant, then also you can claim vacant. Then also you can claim SOP. But now tell me one thing. Tell me one thing. Here, are you taking benefit out of the property by giving the property on rent? Are you earning the rent? Yes. So now the moment you start taking the benefit out of property, moment you start earning the rent from the property, you cannot give the SOP status. You will have only one status for this property, and that is LOP. Getting my point? So here double status cannot be given. Only single status. And that single status cannot be SOP. Hello sir, that single status cannot be SOP because you have started taking the benefit. The status will be LOP. And this is written in 23 subsection 3 based on time. Now tell me, what will you do with this property? How will you calculate the annual value? Come on, tell me fast. How will you calculate the annual value? You know how to calculate annual value of let out property? You know now, municipal value, fair rent, whichever is higher compared with standard rent, whichever is lower will become expected rent. Now expected rent in this case, expected rent will be for the full 12 months. Because the ownership of the property is for full 12 months. So municipal value, fair rent, standard rent, all the amounts for 12 months, expected rent will be for 12 months in this case. Hello? Actual rent will be for how many months? Let out period was 9 months. Actual rent will be for 9 months. Listen to me very carefully. Is there any vacancy in the property? No, Akshaya. 3 months you are occupying, self-occupied, and 9 months some other person occupying. There is no vacancy. If there is no vacancy, what you do? Actual rent or expected rent, which will be for 12 months, whichever is higher, that you will take as GAV. Hello, sir. Because there is no vacancy. So a property which is partly let out, partly self-occupied based on time, can there be a vacancy? Yes, there can be vacancy. That is the second case. See, let out for 9 months. 1 month kept vacant, and for 2 months it was self-occupied. Yes or no? What status you will give? Let out property only. Come on, tell me. Expected rent for how many months? 12 months. Hello, sir. Actual rent for how many months? Actual rent be 9 months. Will you directly compare actual rent with expected rent? No. Now there is a vacancy of 1 month. Getting my point? Even after 1 month vacancy, if actual rent is higher than or equal to expected rent, no, take the actual rent as GAV. Hello? But what if this actual rent is lower than expected rent? Will you add vacancy rent? Yes. Now the vacancy rent of only 1 month will be added. So actual rent of 9 months plus vacancy rent of 1 month, both taken together. If it is equal to or more than expected rent, then take the actual rent only. Hello? But if actual rent of 9 months plus vacancy rent of 1 month, both taken together, still less than expected rent, then take the expected rent as GAV. You have to do the same thing which you have done for let out property. Hello friends, did you understand? So when the property will be partly let out, partly self-occupied based on time, you are supposed to calculate like this. Are we going to solve one question on this? Then after solving that question, I will bring you to this part. Sure? So first we are going to solve one question. Come, we are going to solve question. Question 7. Illustration 7. Start. This is Raj Lakshmi only. Owns a house property at Adyar and Chennai. So you are having a house property in Adyar? Okay. The municipal value is 5 lakh rupees, fair rent is 4 lakh 20 and standard rent is 480. So first of all, let's calculate expected rent. Okay. Very easy to calculate. Tell me, expected rent here will be 5 lakh or 420? 5 lakh. 5 lakh or 480? 480. Expected rent will be 4 lakh 80,000. Any problem till here? No. What is actual rent of the property? They are saying that the property was let out for 50,000 per month up to December 24. And thereafter, tenant vacated the property and Srimati Rajlakshmi used the house for self-occupation. Meaning that April to December, the property is let out. And thereafter, from January till March, the assessee is self-occupying the property. Tell me, is there any vacancy? 9 months let out, 3 months self-occupied. Done. Actual rent will be for 9 months only. So 50,000 into 9, actual rent will be 4,50,000. Yes or no? Now, if there is no vacancy, what do we do? Actual rent or expected rent, whichever is higher. 100. Wait. Actual rent or expected rent, whichever is higher. That we take as GAV. So our GAV here will be 4,80,000 only. I should have reduced unrealized rent from actual rent, but we are not going to do that. We are reducing unrealized rent from GAV. So is there any unrealized rent given in the question? Yes, 2 months rent could not be recovered. November and December, 2 months rent could not be recovered. Meaning 1 lakh rupees of rent is unrealized rent. So out of my GAV, will I reduce 1 lakh rupees? Yes, sir. So how much will be my final GAV taxable? 3,80,000, sir. Okay, sir. Now tell me one thing. If 3,80,000 is my final GAV, is there any municipal tax? Yes, sir. The municipal tax is 12%. So 12% of 5 lakhs will be 60,000. Sir, 60,000 municipal tax I will reduce from here. So my NAV will be 3,20,000, sir. Everyone got it? Now 30% of 3,20,000 will be how much? Section 24 clause B standard deduction, 24A standard deduction will be 96,000. And sir, there is one loan which I have taken for this house. Interest on that loan is 25,000. But this loan was taken for repairs, sir. So what? It is a housing loan only, no? Housing loan, whatever interest you have paid, that entire interest will be allowed because the property is what? Let out. LOP. Hello, sir. So what you will do? 24 clause B. How much deduction you will take, sir? 25,000. Do you have calculators, everyone? Please use the calculators. Depreciate the calculators. Come on fast. On your calculator, 320 minus 96 minus 25, you will get 1,99,000. Kani, got the answer? Where did you commit the mistake? You know? Will you repeat that mistake? Write down wherever you are committing the mistakes, no, while solving the questions. Write down then and there only that in this question, at this place, I committed the mistake. So when you next time see that question, no, you'll come to directly your mistake. It will be in front of you. Rest everything is okay, but here I am committing mistake. So you will be careful from now onwards. Getting my point? Sure, everyone? Now see, the second part which was there, only one question for partly let out, partly self-occupied based on time. Only one question was there. But that question is important. Huh? Mark that question important. Okay? Because only one question is there on that concept. Now, one partly let out, partly self-occupied based on area can also be there. Now, what is this, sir? Sir, I have one house property, sir. Wait, huh? I will make the house property like this. In this house property, no, sir. in this house property, this is first floor, this is ground floor. This first floor, no sir, this first floor, this was let out by me. And sir, this this ground floor is there, no sir, this ground floor. This ground floor was self-occupied by me, sir. And both the parts of the property are equal in area. Example, whatever area is there for self-occupied portion, equal area is for let out portion also. For example, self-occupied portion is 500 square feet. Hello. Then let out portion is also 500 square feet. That means the entire house is 1000 square feet. Out of that, 500 square feet is what? Let out, and 500 square feet is self-occupied. Possible or not possible? Now tell me, if the annual value of this entire house is calculated and the government is saying pay tax on the entire annual value, will you like it? Why? Because the entire property annual value you are not earning in the form of rent. Yes or no? So you'll not like it if the annual value of the entire house is charged to tax. So do one thing. Annual value of the entire house, claim it exempt. Now they will not like it. Because annual value of the entire house, out of that, part of the house you are letting out and earning the rent, no? So why are you claiming the annual value of the entire house as exempt? So there has to be some midway. What is that midway? Treat the let out portion as separate property. Hello. And treat the self-occupied portion as your separate property. Getting my point? This part will be now treated as a separate property. This part will now be treated as a separate property, and calculate the income for both separately. So now, if the municipal value, what did I say? If the municipal value, fair rent, standard rent, and municipal tax is given for the entire house, now you will have to divide them into the ratio of area. Half, half. Half of this relate to let out portion, half of this relate to self-occupied portion. So the half portion of these amounts which relate to let out portion, from that the LOP income will be calculated. Hello. And the half amounts out of this which relates to self-occupied portion, those will be ignored. Because self-occupied portion is a separate property. And assuming that this is the only SOP, exemption will be claimed. What if there is one more SOP? Then this is second SOP. Both can be claimed as exempt. What if already two SOPs you have claimed as exempt and this is your third SOP? This now will be treated as DLOP. Hello, sir. Only this case cannot be there. Wait, there can be one more case. See, now there is one house. Okay. Now this house has, for example, 3 equal parts. 3 equal parts. 2 parts are let out and 1 part is self-occupied. Possible or not possible? Come on, tell me. So out of the 3 equal parts, 2 parts are let out, means 2/3 portion is let out. And 1/3 portion is self-occupied. So whenever these amounts are there, now you will not divide them half-half. Now you will divide them 2/3 and 1/3. 2/3 will be used for calculating let out portion income. And 1/3 will be used to calculate SOP portion income. Yes. But ignore all those amounts because this SOP you are claiming as exempt. Hello? Getting my point? Now pay attention. If interest is given, actual rent is given. Now tell me, this actual rent also you will divide, no? Like these amounts you have divided into let out portion and self-occupied portion, you will divide the actual rent also, no? Please divide. Please don't divide this actual rent. This will be entirely for the let out portion only, sir. No need to divide this amount. What about, sir, interest on housing loan, sir? Interest on housing loan, and the loan was taken for entire house. If the loan was taken for entire house, it was not taken for a particular section. Hello? If the loan is for entire house purchase, loan is to construct the entire house, loan is for repairing the entire house, then the loan relates to entire house. So interest also relates to entire house, no? Hello? Are you keeping the entire house let out? Are you keeping the entire house self-occupied? Then you'll have to divide this interest also in the same ratio in which the property is let out and self-occupied. Yes or no? Based on area. Now what you will do? Out of this interest, the interest which relates to let out portion will be allowed fully as a deduction from let out portion. Hello? But the interest, proportionate interest which you have calculated for self-occupied portion will be allowed as a deduction from self-occupied portion. Hello? Subject to maximal limit of 30,000 or 2 lakh as the case may be. But wait, this SOP and another SOP both taken together, the total interest cannot be more than 30,000 or 2 lakh. That also you have to keep in mind. And this interest will not be allowed only for SOP portion if you are following 115 BSc. If you are following 115 BSc, will you get any deduction for interest from SOP portion? No. So for this SOP portion, whatever interest will be there, that interest will be allowed as a deduction subject to maximum 30 or 2 lakhs as the case may be, provided you are not following 115 BSc. But whatever interest which relates to this SOP will be completely ignored, will not be allowed as a deduction because you are following 115 BSc. Hello, sir. Getting my point? Be a little bit careful. Otherwise, this is also easy. Now, how you will present the answer? Okay. Now, the presentation will be like this. You will write down let out portion here. You will write down self-occupied portion here. And the total amounts you will write down here. Now, for example, if municipal value here, you will write down the total amount. Out of that, this part you will ignore. And the balance part you will take here to calculate what? LOP income. Likewise, fair rent will be there. You will write the total amount here. Whatever fair rent which relates to self-occupied portion, ignore that. But the fair rent which relates to let out portion will be written here to calculate the let out portion income. Now, whenever you will compare, no, always make the comparison in the let out portion. Don't make any comparison here in the total portion. Why, sir? Because that is just to write down the total amount so that you come to know that out of this, half is SOP, half is LOP. Out of this, 1/3 is SOP, out of this, 2/3 is LOP. No comparison is done in total column. Comparison will be done in LOP column. Okay. Hello, sir. So this is your partly let out, partly self-occupied based on area, and maximum questions are asked on this part. Getting my point? So in tomorrow's lecture, what we are going to do, we are supposed to start the questions on this part. But before that, in my notes, which I have given you, you will see both let out portion, partly let out, partly self-occupied based on time also and based on area. Read that theory properly. Will you? And tomorrow, starting of the lecture, we'll start solving the questions. Few questions done. That means now small concepts will be remaining. Those concepts will cover tomorrow. Tomorrow's lecture will end this chapter. And then we are going to start with salaries. Next topic. Done? Bye bye. See you all tomorrow. Okay? Bye everyone.